Alright, I think we are live again. Let me just verify it. Yep, and 1:52 a.m. Has it started? Yes, it has started. Yep, and 1:52 a.m. Has it started? Yes, it has started. All right. So, so what are we gonna do today? Basically, as we saw with T3 yesterday, let me just firstly quit everything that is not needed right now. Uh, Spotify notes, cursor, Visual Studio Code. So yesterday, after I went offline, I did one more thing, and that was just adding up the streaming as well. So let me just clearly show. So some things are like there are types error. This project is not yet completed. Like it requires 1 hour or like 2 hours worth of work more to like just make everything much better. I can fix all the type errors with just AI right now, but let's not do that. Um, I'll just quickly like you know wait a second. Yeah, I'll just quickly go over like what the project looks like right now. So let's see. Okay, npm run dev here, npm run dev here. Yeah. So as we can see, the streaming is working. Money. Uh, Most of the things that I was trying to do yesterday have been completed, aside from obviously a few things, which is, for example, I wanted to do attachments. I wanted to add Razorpay, in the sense I wanted to add it with the credit system of like my product, plus the attachment thing. So these two are left, but attachment won't take a lot of time. The same goes for Razorpay, or I can do it later on. There is some UI clarification that I need to do. So majorly this is what I've been trying. Yeah, sorry for all the like leaving something like that, right? So need to clear up the UI a little more. Like going to the profile page, I have customization option now. I have not created any profile right now. I don't want to. Like the history sync is working properly. These are all the free models that are already present. So most of the things that I wanted to do are completed. Just two more additions, some more like UI. Um, I think organization and like making the UI look a little bit better would be the next bit that I want to do in this project. But that is for later, because today we are going to do something else, which is we are going to do, let's go to Harkirat's cohort. Okay. Harkirat. So I have this particular uh, course available for me. Just want to let everyone know that I think this is like what I'm doing is not the right thing, is not the right thing to do. And I just I'm just doing this for like learning purpose. Not gonna share his entire cohort, obviously. Just wanna look into how to make exchange, and for that, I think I'll need to find out some way. My profile. So this is my friend's profile, by the way. Silly me. Let's look into this because I think it was in cohort 2 when he made that particular thing. Course video TSA here, course videos. Yes, so and this is Paytm. This WebRTC testing from start. I think this is such a great cohort. This is exchange where we have to make it. So, to be honest, there is a lot of stuff behind this which I have never touched. So, I don't know rate limiting. I don't know OpenAI spec. I don't know if it's something specific, singleton pattern. These are the things that I'm not really good at. Like, I've not even done them. I don't know how to operate with them. But I think I can still hop onto exchange and like learn one by one. So it's a part like 4-part videos. Let's see how much we can cover up. And yeah, this is Hakirat's cohort. All respect to him. I'm gonna live stream it. Like we can make this together, study together. So yeah, that's the goal. Again,
today we will be
thing. I don't want to pirate his video by any way or form. One thing maybe I can do is like make this stream private later on, but I still think like judging from what my audience is like, there is none. There is zero audience, so I don't think so. It even matters. I'm doing this for myself, so yeah. Let's just hop right into it and like let's just see how Hakirat's cohort is helping me
building
in making exchange,
or at least trying to understand how an exchange is built. This is something that I've been doing for the past, you could say, around 1.5 years. The company that I used to work at pivoted to becoming an exchange. So from first principles, me and one more engineer, the CTO of that new company, built the exchange from scratch. This video is going to take you through, I'll take you through our approach. Yeah, how did we target building an exchange? Eventually the exchange became very big, and now at some days did like $1 billion of total volume, which is a very big number. Even Binance doesn't do that much volume. It wasn't because the exchange became very big, because there was a lot of marketing, people were fake trading a lot, whatever the reason was. There was the systems that were built were very heavily tested during those days. It took almost 6 to 8 months to build it. So this is going to take you through how you build an exchange from first principles. There's a lot of finance jargon to learn first. Then hopefully we'll be able to write a very basic order book, understand what an order book is. But I'll share all the core difficult bits of building a system like this. It's also very counterintuitive how you build an exchange compared to how you might have built a full stack website until now. Without any further ado, we're at 7:05. Let's get into it. Before we start, there's a very big distinction between an exchange and a broker. So let's first understand that. An exchange is the real thing that lets you swap assets. A good example here is New York Stock Exchange, or India mein we have 2 exchanges, NSE and BSE, or all crypto exchanges in themselves take assets from one side and convert it to the other side. If you give them INR, they give you some Bitcoin. That does not happen exactly for Robinhood, Grow, or Zerodha. These are brokers. These are built on top of NSE and BSE. What we are building is this thing right here. We are not building a broker. A broker is also a fairly challenging problem to solve, but not that one that we're solving today. What are we solving? We are building an exchange. What should it finally look like? What does an exchange look like usually? You can just go to backpack.app or backpack.exchange, sorry. This is what an exchange looks like. Or if you've used Binance, or if you've used WazirX, all of these are exchanges, and under the hood use very similar principles. They have a chart over here. They have a history of trades that you have made. There is something called the order book, and there is an order placement UI. These are the 4 things that any exchange needs to support. If you look at Backpack and open any market, there is a chart over here. there is an order book over here, there is the set of trades that have been recently made, and there is a UI for you to place a new trade. I want to buy, let's say, 6 Solana, each one of them for $133.95. This is the front end for it. We'll eventually get to the front end. But there's a lot of things that happen under the hood that we need to understand first. So let's get into that. Let's understand some core concepts that you need to know of before you're even thinking of building an exchange. Use very similar principles. They have a chart over here. They have a history of trades that you have made. There is something called the order book, and there is an order placement UI. These are the 4 things that any exchange needs to support. If you look at Backpack and open any market, there is a chart over here. There is an order book over here. There is the set of trades that have been recently made, and there is a UI for you to place a new trade. I want to buy, let's say 6 Solana, each one of them for $133.95. This is the front end for it.
I'm so dumb. Basically, I was just muted and I just kept blubbering some rubbish. But what is happening right now is basically exchange is something in which we can give INR, get crypto back, some other currency, anything. It's just an exchange, like someone giving me $1 and I'm giving back, giving back to them $95, something like that. All right. Other thing is, generally I think what we are going to build today, or like the exchange generally, are for crypto to money, like basically INR to crypto, because as we can see, even right now it is BTC to INR. So I think, yeah, this is how it's going to be, like basically the exchange. Now every exchange, for the UI at least, we have 4 parts. One is the chart, the other is the order book, the other is the UI for putting money, and lastly the other thing is, yeah, history trade. So chart, order book, UI for putting money, history trade are the 4 things that are important to us. What I was trying to say before, like I muted myself, was UI for putting money and history trade seems pretty easy. Chart seems like it will come from a library, and the order book is something that I think will take a lot of time, but I might be completely wrong. Let's just look how it goes ahead. I'll just continue. Wait.
We'll eventually get to the front end. But there's a lot of things that happen under the hood that we need to understand first. So let's get into that. Let's understand some core concepts that you need to know of before you're even thinking of building an exchange. When you're thinking of building an exchange, when I was told that we're building an exchange, the first thing that came to my mind was, a zero dhalai cap. Someone will come, they will say, I'm paying you 100 rupees. We will give them, 0.1 Sol. Under the hood, that is what happens. But there are a lot of systems that need to be built to make that happen. Let's go through some jargon. This is what the final UI looks like. If you open any market on an exchange, for example, again, if I go to backpack.exchange and open any market, what do I mean by market? Here, if I want to buy Solana, I will come here. I've opened the Solana USDC market. I can convert my US dollars, let's say. Forget what USDC is. US dollar to Solana, I can convert Solana to US dollars. This is the page that I would open for it. When I open this page, what do I see? I see a history of the price of Solana. How did Solana go up and down in the last, let's say, few days on this exchange. This chart will be different for every exchange. There might be a different exchange where Solana is going up. There might be a different exchange where the price of Solana is not 134.28, it is 135. There might be another one where the price is 136. If I open Coin Market Cap, which is a website that shows you the current price of popular cryptocurrencies, this just gets the price from various markets. KR on Binance, the price is 133.99. On another Binance market, Sol FDUSD, the price is 134. On Coinbase, the price is 134.01. On OKX, it's 134.00. It averages them out based on volumes. Here, how much volume was traded at this price? How much volume was traded at this price? So on and so forth. It finds a mean, and that is the final price of Solana according to CoinMarketCap. The price of any asset is just what price it's being traded at in various exchanges. You average them out based on the volume of that exchange. We are building one such exchange. We want to be one such player over here. Here we are also, people will come and buy from our exchange, and we also want to come into this list. How do you build that exchange? You need to know this chart. The second big jargon for today is going to be this thing called the order book. I repeat, the order book is a list of people. Order book. We are one such player over here. Here we are also, people will come and buy from our exchange, and we also want to come into this list. How do you build that exchange? You need to know this chart. The second big jargon for today is going to be this thing called the order book. I repeat, the order book is a list of people that are currently willing to buy or sell this asset. I repeat, there are a lot of people in the world who are like, yeah, I will buy Solana at 134.22. I always get confused between these two. I will buy Solana at 134.22. I am willing to buy 0.82 Solana for this much. Another guy who's saying, I will buy Solana 100 quantity at 134.21. As you can see, this book is changing very quickly. This order book is the current set of people all around the world willing to buy or sell this asset. When they're trying to sell, they're like, bro, I will sell you for 134.14, slightly above this fair price. And when they're willing to buy, they're like, I will buy for slightly less. This is true. They're like, to buy or sell this asset. When they're trying to sell, they're like, bro, I will sell you for 134.14, slightly above this fair price. And when they're willing to buy, they're like, I will buy for slightly less. This is true generally for any asset. If you open Axis Bank on site, I always get confused between these two. I will buy Solana at 134, saying I will buy Solana 100 quantity at 134.21. As you can see, this book is changing very quickly. This order book is the current set of people all around the world willing to buy or sell this asset. When they're trying to sell, they're like, bro, I will sell you for 134.14, slightly above this fair price. And when they're willing to buy, they're like, I will buy for slightly less. This is true generally for any asset. If you open Axis Bank on Zerodha, over there also you will see an order book like this, which clearly shows a bunch of what are called market makers. I repeat, market makers that have placed orders on this order book. These are people who are willing to buy and sell. When you as a consumer you go over here, you go to this order placement UI and you say, yeah, I want to buy $100 worth of Solana. And you click on a button, you buy 100. I want to go this order book. These are people that have placed orders on the market makers. I repeat, market makers that have placed orders on this order book. These are people who are willing to buy and sell. When you as a consumer you go over here, you go to this order placement UI and you say, yeah, I want to buy $100 worth of Solana. And you click on a button, you buy $100 worth of Solana. But market makers are a little different. They don't have a UI like this. Or even if they have a UI like this, they place what's called a limit order and not a market order. We'll understand the difference between both of these very soon. And lastly, one fourth section that you see here is the trades that have recently happened. For example, at 7:11 p.m., 0.01 Sol was traded at this price right here. And since this is the latest trade, this is also the current price of Solana on this exchange. On another exchange, whatever price the last swap happened at is the price of Solana on that exchange. What are the core concepts we are learning? The current price of Solana. This price is the last trade that happened, the price at which the last trade happened on this exchange. If I open a different market, let's say I open Ethereum, what was the last trade that happened here? 3499.18. That is the fair price of Ethereum on this specific exchange right now. Time series data, a data of the price over time on this exchange, finally plotted out on a graph. This graph that you see here is a commonly used library called TradingView, which most exchanges, price trackers, everyone uses the same sort of library under the hood, because traders are very familiar with this sort of a UI. They can build lines on this, a bunch of things. Order book, we'll discuss this in a little more depth. depth, but high level, what do we need to understand? The order book is what makes trading possible. If you are building an exchange, the first thing you have to do is build all this UI, the front end, the back end. The second big thing you have to do is get market makers on board. You have to talk to a bunch of market makers and tell them, "Kya, we are building an exchange. Please come and provide liquidity. Please come and put some orders on both the sides. Kya, I'm willing to sell for X, I'm willing to buy for Y." Because only if market makers, the people who are making the market, come to your exchange and place these orders, can you let your users trade. If this order book is completely empty, if you built an exchange but never got market makers on board, this order book will be completely empty. When someone wants to buy and click on the buy button, there is no order on the other side willing to sell, which is why you need market makers to come and make your order book very liquid. Lastly, the order placement. This order book will be completely empty. When someone wants to buy and click on the buy button, there is no order on the other side willing to sell, which is why you need market makers to come and make your order book very liquid. Lastly, the order placement UI. This is what you would think you need to build if you're building an exchange. Just one button where a user comes and says, "Yeah, I want to buy, let's say, $3,500 worth of Ethereum." They click on a button, they get one Ethereum in return. But under the hood, this is what facilitates that. There are two types of orders on an exchange.
Yep, so time to revise again whatever Harkirat told. Basically, according to my learning of whatever he has said so far, we are not the brokers. Different platform had different price and average. Uh, what my understanding of this overall is, let me think of it once. Let me make an idea about it. So we have the chart, we have the order book, we have the previous trades, we have the UI that gives us the option of putting up the money. This is very self-explanatory, I would say. Like, it's very easy to understand like what this is. For limit and market, these are two options. The limit is something that market makers use. Now, there is one more thing that we'll have to keep in mind. There are two sets of people. Firstly, the market makers. I think these are the big sharks of the exchange world, in which like they're putting a lot of money to buy and they're putting a lot of money to sell. We are getting a bunch of market makers, and then there would be a second set of people, which will be the consumers, or like the normal people like us. In that, I think majorly uh, they are the people who see how the order book is running, and on the basis of that they bet their little amount of money. I don't know how much, but let's see my understanding is correct or not. The book is something that is maintained on the basis of the market makers, and the last trade, like the trades that is happening over the period of time, is stored in a database, which is then reflected in the chart. So this particular data that we're seeing right now in front of the, like the chart data basically, is something that is the way the asset has been sold over time, and like how, what is the pricing of it. Now the pricing changes on the basis of what was the last trade like. So let's go to xcarry draw and like gpt if we are correct. Okay, so this is this is this is okay, this is market makers, this is market makers, and the second one is consumers. All right, so uh let's make this. They put their money in the order book. Oh my. No. Okay, wait. Yeah. Order book. Market makers are putting on the basis of them, order book is getting made. Mm, I'm a little confused. So the market makers is what fills up the order book. There are two types of things that they can do. Either they can sell or they can buy, right? On the basis, okay, and there is order book maintenance on the basis of that a particular no wait this happens when the selling or buying happens. uh, when selling or buying happens when the selling or buying happens, what happens then? When the selling or buying, the last trade that happened, my god. The last trade that happened is the actual price of that asset. Price of that asset the consumer over here I think buys or sell on the basis of this, which which again gets reflected to the order book. Do you think this is correct? I don't know. Let's ask GPT about it. And this is how I can escalate my learning with AI. GPT seems nice. Hey, I'm making exchange. This is my understanding of how things are. Am I correct? Yeah, is my mic working? Yeah, it is. Yo. Your understanding is actually pretty good for a first principle mental model of an exchange. You are very close. Just a few important correction and clarification. Market maker place of in the order, correct? They continuously bid, buy orders are sell price into the order book. That creates liquidity. Yes, market makers is what providers liquidity. Market makers, market makers provides us liquidity. So that is correct. The last rate affect the visible market price, and that is pretty simple. Consumer traders buy or sell based on current visible price. Correct. Retailers trade. New trades update the order book. Correct. The cycle continues. The important correction. This part is slightly inaccurate. Order book last trade, because a trade only happens when a buy through the matching angles, market makers, orders, order book, matching engine, executing trade. Understand? The order book is just pending intent. Example, buy one. Okay, so is it like market makers come and put up the price on which they want to sell or buy the asset, and on the basis of the stays there till the match happens between two market makers who want to sell and buy. As soon as the trade happens, the price gets reflected, and the price reflected is what is shown to everyone, and on the basis of that price, regular consumer buys the asset. Now, is this correct? If yes, then another question I have is that if I buy on X amount, will the fair price be updated to that later, or it only happens when two market makers make a deal? Now you're getting very close to how exchange actually works. Regular consumer also affect the price, not just market owner. Market makers and normal users can place buy order into the order book. Buy one Bitcoin. Sit there waiting. See, my entire understanding of it. This is quite complicated. I'm not able to grasp my head around it. Okay, can you give me example forms of how the exchange starts? Imagine there are no people, no data to start the exchange. How does the first person comes? How does the market makers comes? Naman Panikkar. Bye. Naman Panikkar, can you do me a favor and not tell anyone about this? Can you please not tell anyone about this, Naman Panikkar? Because this is for my learning. This is not for this is not for anything else. Why? It's quite embarrassing also. Come build exchange with me. Bro streaming on YouTube and trying to keep secret. Bhai, how did you were like रुक जा 2 सेकंड 1 सेकंड तू मेरा फॉलो तू मेरे को सब्सक्राइब करा हुआ है क्या तूने मेरे को यूट्यूब पे तभी भाई व्हाट द फक मेरे को बाकियों ने नहीं करा है तो फिर इट्स ऑल राइट ब्रदर आई कैन स्टिल मेक दिस वर्क तो 3 लोग वॉच कर रहे हैं भाई तो मतलब कहीं ना कहीं से कोई और भी आ ही गया है तभी भाई व्हाट द फक एक XYZ बंदा भी है नमन तू भी बना ले आज एक्सचेंज साथ में बनाएंगे सर अ फैम सब्सक्राइबर सर यस आई नो ब्रदर आई नो ब्रदर आई नो engage with your audience no तेरे को मैं वो कर सकता हूँ कुछ make this guy something put user time out चलो भाई okay भाई then I'll start whatever I will continue whatever I was doing Okay, can you give me example in forms? ठीक है. What is actually one of the best questions you can ask? Because it forces you to think about it. Imagine you know other exchange. You add BTC, USDT, market, no users. I understand this much. If now I want to buy BTC, so exchange means Suppose external global British rises 1 lakh. Now your exchange suddenly has 99,950. Bye bye Naman. Your exchange has 99,950, 100 and 050. Now users can trade. Now your exchange suddenly has 99,950, 100 and 050. Now users can trade. The exchange itself did not invent the price. Same to you, Naman bhai. Best of luck. Bye bye. The exchange itself did not invent the price. The market maker used external exchanges as price references. This is how new exchanges bootstrap price discovery. Does this buy, sell, and bids ask means I bought it at 99,950 and I'm willing to sell at 100,050. If no one agrees, no trade. You place sell 1 BTC. This means I'm willing to sell if someone pays 1. This becomes an ask. Now another person places buy 1 BTC in it. I'm only willing to buy. Then this becomes a bid, buy order. Current order, bids on ask. Will a trade happen? No, because buyer wants cheaper, seller wants higher price. Don't buy. When does trade happen? A buyer comes and say, I think if I'm able to figure this out completely today, it will make the entire project much more simpler. So I think it's worth it to invest this much time over here right now. So that's why. What does this part means? Does the market maker put both values? Both. Then I will by the ask. Because they want to buy slightly cheaper, sell slightly higher. Exchange is simplest. This is some official asset price first, then people buy sell around it. Anyone can buy order, bid, sell order, buy, give me a bidding price. I want to sell, this is my asking price. No matching, no trade. No matching, no trade. Buyers and sellers disagree. Buyers and sellers disagree. Buyers wants 99,950, 100,050, nothing happens. I think it was getting a little loud, so that's why. They executed trade, but no, so is it no? No magic word setters. They are just traded amount that continuously places both buy orders, sell orders to provide liquidity. The final correct mental model. So why I've reached market manipulation now. And here's what it was second temporary move failed. Most buy wants 700. Create fake trade, but immediately after real trade displays. Okay. But real market, thousands of traders disagree. Alone means very little. Okay. Uh, I don't think so. A lot of it has been covered up, but I think I can just continue further from here, right? So let's just.
Is completely empty. If you build
My understanding, I'll tell you guys again. So okay, market makers are like people, bots slash I don't know XYZ things that comes to a very new platform in to bring in the liquidity basically. So like if there is no trade happening, how will a person come and be a consumer, or how will a person come and be a buyer? Just a sec. Yeah, so how will a person come and be a buyer? To provide that liquidity to happen, what one can do is generally just bring in the bots or bring in some traders that can come and put like, okay, I'm buying at XYZ price, I'm selling at XYZ price. And when that multiple times over like happens, it gives liquidity to our platform. It builds up the order book, and on the basis of the trade that has happened, the bidder or like the person, like normal person like me, can come up to the stage and be like, okay, I want to buy at XYZ price and I want to sell at XYZ price. So again, my buy and ask will be set up in the order book in very small volumes, and whenever the trade happens, it will be reflected on the current price, whatever it will be present. So this is my very normal basic understanding of how it is. Now let's just jump right back into the exchange lecture. Before that, I would like to read the chart. Let's do backpack exchange. Markets. So let's just look into this. So current prices, well, it is 8306. I want to buy one. Oh my god, this is so confusing. I think the last trade happened at 8306. Yes, 31. Does it get refreshed in real time? 54. After that, 46 at 56, 31. Again, a trade happened. So if I buy something over here, will it be reflected over here? Price order value. Hmm. Okay, let's just jump right into the lecture because I'm getting very, very confused. So yeah, just let me.
Built an exchange but never got market makers on board, this order book will be completely empty. When someone wants to buy and click on the buy button, there is no order on the other side willing to sell, which is why you need market makers to come and make your order book very liquid. Lastly, the order placement UI. This is what you would think you need to build if you're building an exchange, just one button where a user comes and says, "Okay, I want to buy, let's say, $3,500 worth of Ethereum." They click on a button, they get one Ethereum in return. But under the hood, this is what facilitates that. There are two types of orders on an exchange. If you've ever bought stocks on Zerodha on your phone, you've placed what's called a market order. Any retail person, right? This is like normal retail youngsters. When they place an order on an exchange, they send inputs that look like this. Okay, hey, I want to buy 2,000 rupees worth of Tata stock. And the exchange returns them, okay, there you go. I have bought 10 Tata stocks for you. You now own 10 Tata stocks. This is how you usually place orders. Okay, I want to buy X. This is 100 rupees. Give me whatever stocks I can get in 100 rupees. That's what's called a market order. I want to buy stocks of Tata for rupees 2,000. Or I want to buy stocks of Ethereum worth $200. But there is another type of order called the limit order. If I go to the UI here, I see two tabs here. Hey, I want to buy Ethereum, but I want to place either a limit order or a market order. On the market order, I just give care I want to spend 2,000 US dollars, give me Ethereum. Or if I want to sell, if I go to the sell tab over here, then I will say, hey, I want to sell one Ethereum. Please give me back, as you can see, it says 3,400 USDC. I just send the amount I want to spend to get the other asset. If this is a ETH USDC market, I say I want to give $3,500 and it will give me back, whatever. This is bonked. It will give me back 0.9966 or 1 Ethereum. But a limit order states here I want to buy Tata, one quantity, but at rupees 200 a stock. You strictly put up a limit. Here I will not give you 1 penny above rupees 200. If you can fill this order, great. If you cannot fill this order, put this on the order book. All these orders that you see over here on the order book are limit orders, can be placed by retail as well. I can also go here and put a limit order. If I feel, if the price of Ethereum drops below $3,200, then I want to buy one quantity. Then I can put an order over here. I will buy one Ethereum, but only if the price goes below 3,200 rupees. I will not buy it if it's 3211 or 3222. If I place this order, my order will also reach this specific order book. I will basically sit somewhere here on the green side. Whenever the price dips below it, I'll be able to place the order. That's what's called a limit order. You can also place it, but realistically, retail never puts limit orders. You just go and buy it off. Market makers are putting, a bunch of these orders very quickly and also canceling those orders. If you look at it, this order book will change very quickly based on, the algorithms that market makers run. If you've heard of Citadel or Jump Crypto, 10 different Wintermute, all of these market makers are very big companies that pay a lot of money to maths people. And what are those smart people doing there? They're trying to figure out the fair value of Ethereum. If they know the fair value of Ethereum is, let's say, 34.99, the traders over there will put some order above and some order below it. They'll be like, fair price kya hai? 34.99 is the fair price. So I will sell some at okay, makes sense. This is not a very liquid market. This is not a great market to look at because the last order was placed here, but the price of Ethereum has moved since then. Let's look at a more liquid market. Let's look at Shuffle. The people at the market maker say, current fair price is this. So we will sell at 0.23.12. We're willing to sell our Shuffle stock for this much. We're willing to buy at this much. As you can see, they buy at a little bit lesser than the fair price, sell at a little bit higher than the fair price. So if someone does take this order, they have another place where they can hedge this order and make some profit off top. That is the other type of order called the limit order. Let's do a quick poll. How are we doing? Let's do a quick poll over here. Do we understand this?
Alrighty. So now the next concept we studied about is limit and market. So what my understanding of limit is, basically what generally the market makers use. So they put up the value that they are willing to pay of, let's say, one asset, one um quantity of X asset. So I can say I will buy 20 stocks of Tata, 20 ETH, 20 Bitcoin, but only when one Bitcoin is $70K. This is how limit works. Limit is trying to buy to limit uh, the price, and this will be reflected in the order book. No, market is something normal people do. Market running is something that normal people do. कि like I just want to go and buy X amount of something. So yes, the value is 50, like okay, market is something like I have this much money and give me whatever I can buy off of the asset. I will buy 20 Bitcoin. This is correct. This is exactly a limit by order. Goes into the order book and wait. Similarly, you can also do sell 20 Bitcoin at 120, meaning I refuse to sell below 120K, and also sit in the. So your statement limit is trying to limit the price. Yes, perfect. You are setting up a equal trade. Passive, they wait. They are liquidity. Market order. You understand? I have this much money. Give me whatever else I can. Yes, this is basically idea. Execute only at the best price in the market by 2 Bitcoin. 1 Bitcoin. Click market by 2 Bitcoin. Instantly happen. Cheapest available sellers. So the market order makes. Yes, the market is something normal people do. This is mostly true in practice. Retailers, users. Precise pricing, waits for profit. Days limit buy, limit sell. Limit order. Sets the price. Wait for matching. Okay, so limit is what brings the liquidity when people come and sell, or when the trade happens in the order book. While market is something that runs on the liquidity, so it is actually one makes the liquidity, the other runs on the liquidity. With the market. Sets the price, waits for matching visible in order book, accepts existing price, executes immediately, consumes order book liquidity. Another limit order, create the market, move through the market. Okay, तो create वाली चीज़ वही होगी, like it creates the liquidity, the other moves with the liquidity. I want this price or better, waits visibly. Alrighty. Let's move
And
forward.
I'm asking, should we proceed? But give me a vibe check of, do we understand this? Shall we move forward? Oh, sort of.
Oh, okay.
Too early for a 75% poll. But ठीक है. Let me quickly recap before we proceed. We are trying to build a website like this. Let's keep it very simple. What are we trying to build? The first project for the cohort, we are building two projects. This one to a website like Zerodha, where you will see a bunch of, Indian stocks, like see a order placement UI on the right. They will see one more thing here called the order book. What is the order book? The order book is a very important concept in exchanges. It is a central book, as the name suggests. It is a central book where two types of orders are present. Forget trading. How do you buy a house? When you have to buy a house, you have a broker in the middle, right? You have a broker in the middle, and you tell them, "Yaar, is society mein I want to buy a house for 3 CR, let's say." You are the buyer. And then an owner of this place, a person who already has a house here, can come to the broker and say, "I'm willing to sell at 3.1 CR." So the broker can maintain a book, right? They can maintain a book. Currently, there is one person who wants to buy at 3 CR, and then there is one person who's willing to sell at 3.1 CR. This is what's called an order book. A broker in the middle sitting and maintaining these orders. If another seller comes and says, "Kya अच्छा कोई 3.1 में बेच रहा है, someone is selling for 3.1, I will sell for 3.01. I will outcompete the other guy so that my house gets bought first." Then the broker will be like, "ठीक है, we have one person who's willing to sell at 3.01 CR. One person willing to buy at 3 CR, one person willing to sell at 3.01 CR. Eventually, one of these will cave in. If they don't, the book will remain like that. No swap will happen. But at some point, this will be like, "Achha, theek hai, I'll pay 3.0001 CR. I'll pay you 3,20,000 rupees or 10,000 rupees." Then this guy will be like, "Okay, chalo, I will go down a bit. Pay me 3.001 CR. I will take 3 crore and 1 lakh rupees." And karte eventually, both the parties will cave in. Chalo, yaar, I'll buy for 3 CR. And this guy will also be like, "Chalo, I will sell for 3 CR. Is when an order would happen. The order book will become slightly less liquid. An order has happened. The assets would get swapped. This person would get a house. This person, the seller, would get 3 CR rupees. What was the biggest concept here? Okay, someone sitting in the middle maintaining these orders so that whenever two parties are able to actually meet demand, whenever two parties come, where a deal can happen, it takes that off the order book, tells them that this deal is done, and swaps the asset. The same thing is happening here, right? There are a bunch of people who are saying, "I will sell Solana for 133.92. I will sell Solana for 133.94, 95, 96, 97, so on and so forth." This is the best offer on the table. The best price to buy Solana on this exchange is 133.92. The best price to sell, if someone wants to buy, this is the best price. If someone wants to sell, this is the best price. That's what the equivalent of an order book is. All the orders here are someone saying, "Yaar, मेरे पास Solana तो पड़ा है." नहीं. All the orders here are people. I always get confused. All the orders are people here saying, "I have $133.91 that I want to spend for one Solana. मैं तो एक Solana का इतना ही दूंगा. I will only pay this much. If someone wants to buy, I have 37 Solana ready. I have 37. I'm sorry, I always get confused. I want to. Yes, sorry. This person says, "I am willing to buy Solana such that." Oh God. Whew. What is the thing niche? What was the thing below? "I will buy Solana or a house for 3 CR, one quantity." And then another person might be like, "Yeah, I don't have too much money. I will buy a house for 2.9 CR. And then another person will be like, "I will buy a house in this society for 2.8 CR. These are what are called bids. I repeat, these are people bidding. Okay, I'm going to buy a house for this much, and what is above? These are what are called asks. These are people saying, "Yeah, I will sell my one house for 3.1 CR. Now there might be one guy who has 2 houses, let's say, and they will say, "I'm willing to sell my 2 houses for 3.2 CR. The thing below is, "I am willing to buy for this much," and the thing above is, "I am willing to sell for this much." Now let's open this on the right and open the exchange on the left, and let's look at the order book again. This person was like, "I will buy for 3 CR, one quantity." The person here is like, I'm willing to buy 37 quantity at 133.99. I'm willing to buy 0.82 quantity at 133.95, 93, 92, 91. As you can see, the price keeps on going low. The person who's bidding the most is at the top of the book. And similarly on the other side, this person is like, "I have Solana. I'm willing to sell Solana for 133.91, 92, 93, 94. This is the best price to buy Solana. This is the best price to buy a house currently, 3.1 CR. Everything else is above it. So if someone wants to buy a house, they will most probably get this specific house. Why would they pay extra for a house? They'll get the best ask that is available and buy a house for that much, which in this case is 3.1 CR. So this thing that is maintained by bunch of market makers is what's called an order book. When you place an order, when someone comes, let's say someone comes and says, I don't worry about the price, I just want to buy a house, I don't care what the price is, give me one house, then they'll be matched to the best ask that exists. कैसे तुम्हें घर चाहिए? You are willing to pay anything. This guy's like, I'm willing to pay anything. Then they'll be like, ठीक है यार, 3.1 CR वाला घर है, ले जाओ. You take the 3.1 CR house. This is a market order. Person came and said, I don't care about the price. That is what you do when you go to Zerodha and give them 10,000 rupees. You say, whatever is the best price, match me to the best price. I'm willing to take all the money for it, or all the stocks that I can get for it. That is what happens when I put 3,500 here. When I put 3,500 here and click on sign up to trade, it says, Acha, what is the best price that Solana can be bought at? It says, Acha, 133.86. How much can Harkirat get in $3,500 for 133.86? 3,500 divided by 133.86. Whatever is that quantity, that gets swapped between us two. This order book goes down by that much quantity, and then market makers come and make the market liquid again. If I put a very big number here, let's say, I want to buy this much Solana, what will happen? I will buy all the Solana from this guy, from this guy, from this guy. All of these I will eat up. I will eat all the order book because I'm willing to pay so much money. So all the asks that exist, I was able to eat all of them, and the market will become illiquid then, because the price of Solana will go up by a lot. As you can see, the market divided by 133.86. Whatever is that quantity, that gets swapped between us two. This order book goes down by that much quantity, and then market makers come and make the market liquid again. If I put a very big number here, let's say, I want to buy this much Solana, what will happen? I will buy all the Solana from this guy, from this guy, from this guy. All of these I will eat up. I will eat all the order book because I'm willing to pay so much money. So all the asks that exist, I was able to eat all of them, and the market will become illiquid then, because the price of Solana will go up by a lot. As you can see, if I put a very big order here, I will eat all of them. The price of Solana will go up to 135 because I ate all of them. That's what happens, right? If a whale comes and buys a lot of houses in a society, the price of the society goes up. And similarly, if I place a very big order here, I will eat all the orders, and hence the price and buys a lot of houses in a society. That's what happens, right? If a whale comes and buys a lot of houses in a society, the price of the society goes up. And similarly, if I place a very big order here, I will eat all the orders, and hence the price of Solana will go up everywhere, including this exchange. Do we now understand what an order book is? It is a central. This will eat all the orders, and hence the price of Solana will go up everywhere, including this exchange. Do we now understand what an order book is? It is a central place that is maintained, and a bunch of people. It's not necessary कि एक ही बंदा है. This could be multiple people. There could be multiple market makers saying कि we are willing to buy at 133.98. This 59.7 quantity or whatever quantity you see here is not a single person. It could be 3-4 people who are currently bidding at this price. Who amongst those people gets picked up if an order comes is a different question. But this doesn't necessarily mean कि these 38 Solana, a single person has placed an order. There might be 3 people. One might have placed an order for 30, another might have placed an order for 8, another might have placed an order for 0.16. Shall we proceed on to the next section? There is a lot of other jargon to go through before we write any code. Let me do a quick poll over here. Okay, we understand this now. Great. Let's move on.
Yeah, so I don't think so there was anything else that we need to talk about, because the market and the limit has been already explained by Harkirat right now. Yeah, let's just continue. There is nothing as such that I can talk about, to be honest. So
on to some more finance jargon. Markets. Whenever you trade, you swap one asset for another. When you go to Zerodha, you give them 10,000 rupees, you get Tata stock. This is what's called a market. This pair of assets is what's called a market. For example, ETH USDC market, Tata INR market. If I go here, what am I looking at? I'm looking at the Sol USDC market. These are what are called markets. Whenever you trade, usually, let's say you're trading, Ethereum for USDC, you trade between, on a single market. If I go here, I'm trying to trade between Solana and USDC. Usually when you trade, there is a currency on one side. For example, USDC is a currency, INR is a currency. There is a currency on one side, and there is a asset on the other side. Ethereum is an asset, Tata is an asset. Whenever you trade ETH for BTC, right? If you ever say, I want to sell one Ethereum, give me Bitcoin in return. Usually, there are two markets you are trading on in a single swap. You are first selling your Ethereum for USDC, then you are using your USDC to buy Bitcoin. So usually, all these trading pairs, all these markets where market makers come and put the orders, have an asset on one side and a currency on the other side. उसके बाद any market you want to create, if you want to create ETH BTC as a market, you can use a combination of two markets. Here, if someone wants to sell Ethereum for Bitcoin, we will first sell their Ethereum for USDC, then we will use this USDC to buy Bitcoin for them. Usually, a market is an asset on one side and a currency on the other side. Base asset is the asset that's being traded. Quote asset is the currency that it's being traded with. So whenever you see one asset on the left and one asset on the right, when you say ETH USDC market, you say this is the base asset and this is the quote asset. Order book, hopefully we understand now. A list of currently available limit orders that people have placed. Orders that are currently available. These aren't existing orders. जो existing orders हो रहे थे वो तो हो गए. These are all the existing trades that have happened in the last, let's say, half an hour. This is people who are currently willing to trade. Here I'm currently willing to sell for this much, currently willing to buy for this much. A list of currently available limit orders that people have placed. The more the number of orders, the more liquid an exchange is considered. As I said, if you build an exchange, you don't have a market maker, this order book will be completely empty. You need a market maker to come and fill it up. If the difference between these two is really small, as you can see here, 134.20 is the best price to buy, 134.19 is the best price to sell. The spread, what is the spread? The difference between the best ask and the best bid. This is really small on this exchange. This makes this exchange extremely liquid. That is not true on WazirX. If you go to WazirX, you will see WazirX is a highly illiquid exchange. If I open the Sol USDT market over here, you will see 133.79 is the best price and 134.68 is the best price over here. What is the spread? It's almost, $1. $1 of spread is extremely high. This is a very illiquid exchange. Why is WazirX illiquid, Harkirat? Because India has crypto taxes. No market maker wants to come and place orders in a market like India. This is why whoever is becoming a market maker, they are saying, yeah, we don't want very big incentive. We want, yeah, if the current fair price is 134.19, I want to buy only for 133.79. Indian exchanges, anytime you make a trade, right, the market maker has to pay 1% as TDS, which is why market makers are like, we will place orders, we are happy to make you liquid, but we will give you a very bad price because when the swap happens, the government takes away 1%. So, our working capital gets eaten up by a lot. The government withholds a lot of our money. We don't want that. So if we do market make on your exchange, we'll give you really bad prices. Versus here, the prices are really good. In fact, if you become a market maker on WazirX, you can, sit on this order book. If someone sells, you can buy their Solana for 133.7. I repeat, you can buy their Solana for 133.7. You can immediately sell it here for 134.07. You can make some profit. Of course, that profit won't be much because there is trading fees that both the exchanges make, and you have to pay 1% to the government. But this is what makes an order book liquid. People usually prefer more liquid exchanges. The more liquid your exchanges, the better your exchanges. The more traders would want to trade there, the more people would want to trade there. More liquidity means better prices. If today you want to buy Solana in India, you have to pay 134.667 is what you will have to pay. But if you want to buy it outside, you will only have to pay 134.17. The price that you get is much better on a more liquid exchange. Bids and asks is the other jargon. Everything that you see here at the bottom of the book is people bidding. Okay, we are willing to pay this much for one Solana. We are willing to pay this much for one Solana. And everything you see over here are asks. Okay, I am asking you 134.88 for 37 Solana that I have. If you want to buy, I'm happy to. Again, I'm confused. This is for I'm willing to sell at this much. This is for I'm willing to. This is for I'm willing to buy at this much. I'm bidding. This is for I'm willing to sell. I'm willing to sell at 3.1 CR, slightly more than the best price over here. That's what's called an ask. And lastly, market makers, big companies that keep the order book liquid. All right, done with some more jargon. Let's look at the architecture of building an exchange. Boy, let's not go here. Let's go to the architecture first. Let's reverse engineer the architecture of Backpack.
Yeah. So I don't think we have missed something specific. I think it's quite completed. Bidding, ask, I have understood that. uh, this is a jargon that Harkirat was talking about. Markets are anything in which there are two things involved, either a currency or an asset. Every pair that you can trade is called a market. ETH, USDC, Tata INR, ETH Bitcoin will have whenever there are going to be two assets, then there are going to be like the trade is going to definitely happen between a asset and a currency, and then again in the same currency and in the different asset. So the asset that is traded is the base asset, which is this one. So whatever I'm buying is the base asset. The code asset is the being traded with. So this one, I guess, right? A list of currently unavailable. Okay. A list of currently available limit orders that people have placed. The more the number of orders, the more liquid the exchange is considered. I think the more the number of orders, the more liquid the exchange is considered is something I don't know, because what Hakira told was the lesser the spread is, the more liquid the market gets. So I don't know, to be honest, but let's just GPT this. More the number orders, the more liquid the market gets. But I think it depends more on the spread. Yeah, spread matters a lot. Liquidity is more like कि मैं आज बेचना चाहूँ तो आज बिक जाए, or like if I want to sell XYZ amount of things too, and so I can just sell it. It's a liquid asset. But if the liquidity decrease, if like I am selling to sell it XYZ amount and the buyer is at 50, so terrible liquidity. How many orders exist around current price? Yeah, so that is not exactly true. The spread is important. Bid is something that the person is bidding. So like I want to bid at 3 crore rupees. Someone is like 3.1 crore rupees I'll give. Someone is like I will get 3.2 crore, and the seller is like no, I want to sell it like 4 crore. So that is something the ask is.
More bids and
So we have understood these two things. Now the reason why WazirX is like this is because the state of like this is not a very liquid product in India. The crypto market is very not very like this too. I can explain better with ChatGPT. So the reason why WazirX has liquidity is because the crypto is not very liquid in general. There are many restrictions in India. Platform fees are high, and then there is restrictions earlier over crypto, difficulty in conversion. These reasons make crypto slash liquidity sounds like, oh, good. Liquidity is I. This will sell any day at the price I want. Bad liquidity is like, this will be difficult to sell at the price I want. Oosh. Because globally major crypto assets are actually very liquid. Good liquidity is quantity without affecting price much. Bad liquidity is hard to find buyers and the affected price. Slippage. Is actually one of the best intuitive. Bad liquidity. Liquidity is not, will someone eventually buy this?
But if you want to buy it outside, you will only have to pay 1.4,
Alright,
right? Once
continue.
the price that you get is much better on a more liquid exchange. Bids and asks is the other jargon. Everything that you see here at the bottom of the book is people bidding, okay, we are willing to pay this much price. What? Let's reverse engineer the architecture of Backpack from first principles, right? What happens when I come to this page? I have opened the Sol USDC market, the Solana USDC market. What?
Just want to check my stream time, so just a second.
When I
97 minutes. It's fine.
what all do I want to see? I want to see this price history. I want to see the order book. I want to see, if I go to this tab, I want to see the trades as well. But here, ignore the trades for now. I want to see the current fair price, the chart, as well as the order book. Let's see what kind of requests you send out when you come to this front end. If I click on the network tab and if I refresh, you will see the request that goes out. Search. One such request that goes out is to an endpoint called depth. Where is this request going out? api.backpack.exchange /api/v1/depth question mark symbol equal to Sol USDC. What is this returning you? This is returning you the initial order book. The order book changes very quickly. This is a real-time order book. So there will be a WebSocket stream from which a lot of data would be coming in. But the initial order book you get by hitting this endpoint. If I hit this endpoint in another tab, I can see the not the complete order book. The complete order book is really big. You know, there are orders that keep on going up and up and up. But you know, the let's say 50 bids and 50 asks I get by hitting api.backpack.exchange /api/v1/depth question mark symbol equal to the symbol that I want to see, the market that I want to see the bids and the asks for. How was this built? This was built by looking at other exchanges. If you look at Binance Docs, you will see they support a very similar endpoint. If I search for depth over here, There is an endpoint slash API slash v3 slash depth. If I look at this endpoint, you send a get request to slash API slash v3 slash depth. It returns you bids as well as asks. So whenever you're building an exchange or the backend of an exchange, you first go to another exchange. You look at, these are the endpoints that they support. This is the response that they give. You create a very similar response. You create a very similar endpoint as well. You create a very similar response as well. As you can see, symbol is a query parameter here. Very similar to, how symbol is a query parameter over here. You look at any exchange, you open CoinDCX, they also have a exactly same signature of the API endpoints. Why is that? So that whenever you want traders to trade on your exchange, they just have to change the URL. They just have to change this URL. Everything else remains the same. The structure of every route remains the same. That is why when you're building an exchange, you first go to Binance Docs, you look at what all do they support, you build the same things. This is the first endpoint that we need to write for today. An endpoint where when the user opens the front end, they look at the current depth of the book. Okay? Let's ignore all the real-time bits for now. Okay? After you come here, this is changing very quickly. Ignoring that, what all do you need to support? An endpoint where you see all the trades or the depth currently. Another endpoint is if I click on trades over here, I want to see the recent list of trades that have happened. If I look at the response here, it shows me for this price and this quantity, an order, a swap had happened recently. That's the most recent order that happened. So if I want to, again, this is also real time. As you can see, more and more data is coming in, but ignoring all the more and more data that's coming in. For one time, I send an HTTP request here. It gives me all the recent orders that have happened on this exchange. If I click on the book again it sends out a request to get the current fresh order book. And then the WebSocket stream keeps on updating this in real time. What else do I need? I need this whole, charts data. How does the chart look like? This also updates in real time. You will see after every 1 minute or 2 minutes, this wick will change. This graph will go up or down, another wick will be added over here. But initially you get, the full history of the price on another endpoint over here. If I refresh this, if I try to find this really quickly, there should be an endpoint that gives you this chart data. I forgot what the endpoint was. Klines, there you go. api.backpack.exchange /API/v1 /klines symbol equal to Sol USDC and interval equal to 1 hour and start time equal to this. Since this start time at 1 hour intervals, every wick over here represents कि 1 घंटे में price कितना change हुआ. The price went down by a bit here, down by a bit here, down by a bit here, up by a bit here. All of this also comes back in a certain format. At this specific, during this specific start time to end time, between this 1 hour, this was the lowest point during that 1 hour. This was the highest point during that 1 hour. This is the opening price during that 1 hour. This was the closing price during that 1 hour. If you really want to look at every wick over here, for example, if I look at this one right here, during this 1 hour interval, price went up to this point, price went down to this point, but this was the starting price at this hour. This was the ending price at this hour. Similarly here, it hovered between these two. If you look, this patla line that you see here, the price hovered between these two, but start time was this, start price was this and end price was this during this 1 hour interval. You can keep changing these intervals, and based on that, you send another request to the backend if you want to see, daily data, monthly data, yearly data, so on and so forth. So these are the endpoints that we need to support as well. At the very least, first, we need to build logic that, just creates an order book and lets people trade. That is the logic that we will be building today. Okay, how can you let users support just these many endpoints? A sign up endpoint, a sign in endpoint, completely ignore these. We are not creating any authentication today. Orders, this is the most important endpoint for today. Okay, a user can come and place an order on our exchange. They will come and say, okay, I am either placing a market or a limit order. If I go here, what are the two types of orders I can create? I can either create a limit order or create a market order. I can either buy the asset or I can sell the asset. So I either want to buy or sell. I want to create either a limit or market order. This is the price that I want to buy the asset at. This is the total quantity that I want to buy. If I want to buy, let's say, 5 Tata stocks or 5 Solana at 130 Solana each. If I'm placing a limit order. If I'm placing a market order, then I don't care, right? We will see, we do care. But if you're placing a market order, if I go here and place a market order, 20, I don't really decide how much quantity will I get. I simply say I'm willing to pay 2,000 rupees or 20 rupees. Give me whatever I can get back. So we will see, based on market or limit order, how the price and quantity change. And lastly, the market that I'm wanting to trade at. This is the input that a lot of our users will send us. Now, some of these orders will sit on our order book. some of these orders will just get matched and the user will get that asset. This is the first endpoint you need to support. This is the endpoint that gets called when you click on the submit button over here. After you sign up and you click on the submit button over here, you can again look at the Binance stocks and look at this, okay, trade or let's say order. Market data endpoints, WebSocket, spot trading endpoints. If you open spot trading endpoints, you will see an endpoint /API/v3/order. This is where you send a request to place an order. What inputs do you send? The symbol that you're trying to buy, the market that you're buying to buy, the side are you trying to buy or sell this asset. This is the asset, for example, symbol is BTC USD. I'm trading on the BTC USD market. Am I trying to buy this asset? Am I trying to buy Bitcoin or am I trying to sell Bitcoin? If you look at type over here, side over here, it says I want to sell Bitcoin. What is the type of order? It's a market order. What is the quantity that I want to buy? I want to buy, is the response or is the request? The quantity that I want to buy is what you send, and executed quantity is what you get back. How much of your quantity got added? So these are the request parameters. This is the response. So this is not the right place to look at it. This is what the server returns to you. Okay, you placed me on this market. You placed this order. This is the executed quantity. How much quantity we were able to match for you. This is the origin quantity. How much quantity you wanted for this specific order. A lot of times, I might say, I want to buy at, let's say, I want to buy at 134.20, but I want to buy 100. Then 91 of those 100 will get matched and the rest of them will sit on the order book. So if you place an order on an exchange, I want to buy 100 Solana at a specific price, some of them might get matched. Some of them you might be able to buy right now. The rest of them would again sit on this order book. That is why if you look at the docs here, there is executed quantity, how much of your order was able to be executed. And if the original quantity was 100, executed quantity was 10, then 90 Solana of yours are still, sitting on this order book, waiting for someone to pick that order up. And very similar, a bunch of extra parameters, if you want to really get into the depth of time in force or, client order IDs and why they're needed. But a best subset of things that you need to support are these endpoints. The type of the order, the kind of the order, the price, quantity, and market that you're trying to hit. We'll look at this very soon. Get endpoint. If you do place an order and it hasn't yet been completely executed, you might want to, keep checking, kitna execute ho gaya, how much of it has been filled, how much of it is still pending. A delete endpoint. A lot of times you place an order and then you want to delete it. If you see here, the book is changing very quickly because people might delete their orders as well. I might put something on the order book and then I might be like, I want to cancel this order. So it might stay on the order book for some time and then I will move it off the order book. If I'm buying a house, I can tell the broker, I'm willing to sell mine at 3.1 CR. Then I suddenly change my mind. I can tell the broker, sorry, cancel the order. I don't want to sell anymore. That is what the delete endpoint needs to do. And lastly, a post endpoint to get the quote on the market. This is an important endpoint, especially for retail users. Let's discuss one extra concept before we get into coding, which is all orders are limit orders. I repeat, I did give you two types of orders. Yeah, there are limit orders that usually market makers create. And then there are market orders that usually, retail users create. But can you guess from first principles? Okay, what is the problem if I go to Zerodha right now and give them 10,000 rupees and say, give me all the Solana you can give or, Tata stocks you can give for 10,000 rupees. What problem can come? Let's say this is the Zerodha backend. And let's say on the Zerodha backend, on the Tata stock, the order book looks something like this. Okay, someone is willing to sell Tata stock at, let's say, 3.1 CR, 3.2 CR, 3.5 CR. One quantity. Let's say I place a market order. What is a market order? I will just tell you, I'm willing to pay this much. De do jo dena hai. Give me whatever you want. I will give it. I'm willing to spend, let's say, 8 CR. I tell it, I'm willing to spend 8 CR. In return, I was expecting around 2.5 houses. This house I will get for 3.1 CR. This house I will get for 3.2 CR. And half of this house I will get for, let's say, 1.7 CR. If you add all of them up, then I was able to buy 2.5 houses. Or 2.5 stocks if I paid them 8 CR. That was my hope. I looked at the order book. I looked at the price. I felt like if I send them 8 CR, they will give me 2.5 houses because this is the best set of asks that exist. The least ask is 3.1 CR. I will get this house, 3.2 CR. Next I will get this house. And I will get half of this house. But I did not give it a limit. This wasn't a limit order. I did not say, ek ghar ka, don't pay more than 4 CR. Don't pay more than 4 CR for a single house. Is something I did not say when I placed the market order. So what can happen is, okay, as soon as I place the order, everyone remove their orders, and there is just one guy that exists over here. Okay, I will sell one house for 8 CR. So if you place a market order and you really don't care about the current price, what will happen is the market will move up by a lot, and you will be forced to buy a single house for 8 CR. I repeat, every time you place an order, you should give it some price expectations. Even if you are placing a market order, right? Even if I go here and I select market over here. Okay, I want to buy Solana. And if I say, I see the price is 134, I will spend $135. In return, I expect at least one Solana, right? I don't expect 0.1 Solana. I see price is 134.43. So if I place an order, I should get close to one Solana. If I place the order and if the backend only gets here 135 is what Harkirat is selling, then this market might move up by a lot. All of these people might cancel the order and I might be forced to buy this one for a very high price. Hence, even when you're placing a market order, you give it some limits. These limits are generated by default for you. For example, I just wrote 135 here. By default, the exchange realized that you're willing to pay this much. Let's give you a limit price. If the price moves, the current price is this much. If the price moves by more than 50 cents on this stock, then don't buy. Even though I'm placing a market order, under the hood, the exchange adds some constraints. You are spending 8 CR, that is fine. But looking at the order book, looking at the current order book, 3.1 CR is the best price. Don't pay more than 3.2 CR per house. The exchange automatically adds this constraints and creates a limit order. You might want to create a market order, but the exchange will make sure it gets what's called a quote. It gets, if a person is coming and about to spend 8 CR, what should be the fair price that they'll get a single house at? And the backend returns. Looking at the current order book, it feels like they will have to at max spend 3.5 CR per house. So the quote here is 3.5, or it'll actually be 3.334, something like that. If you're spending 8 CR, on average you spend this much on a house. The backend would return you this quote, and then you would place a limit order with this quote. I'm still placing a limit order. You told me if I spend 8 CR, I should get an average price of this. So this is my limit. If the order book moved up by a lot, then please cancel this order. I don't want this order to be filled if the price moves up by a lot. If I go here, unless the logic is changed, if I go here and put a price of 200, the logic has changed. If I put a price over here, they make an estimate of this is as if I make this number bigger, this logic is bad. If I put a number over here, they say even though I don't put a limit price, they force a limit price on me. 134.04 se upar mat jane tera. If the price moves so much, because the current price is 134.56, if the order that you've placed moved the price up by ditna much, then the order would cancel. It would say the trade has failed, basically. Do we understand the reason of this quote endpoint? The first request that you send before you actually send a request to place a market order, you never place a market order. You always place a limit order. All orders are limit orders. Even when you're placing a market order, you give it some limit. Even though I'm retail, move the price up by a bit, but still, there is only a certain impact that I can take. If the current order book looked like this, my expectation is I'm getting a house for 3.2 CR on average, 3.3 CR. If this price moves up by a lot, please cancel my order. And hence, you first send a request to get a quote. The server responds back with, there you go. 3.334 is on average what you will have to pay if you're spending 8 CR. I repeat, the first request that you send is if I'm willing to spend 8 CR, how much will I have to pay on average on a house? The backend returns you will have to pay on average 3.334 CR. Ye ghar hoga, ye ghar hoga, ye ghar hoga. We will give you 3 houses or 2.5 houses. This is the average price you will have to pay per house. It will probably be 3.19844, something like that. Because one I'll get for 3.1 CR, one I'll get for 3.2 CR, and half I will get for 3.3 CR. So it will be slightly less than 3.2 CR. Then I can send to the server, hey, limit order for 8 CR. I'm willing to pay 3.1844 per house. This is how you would place a market order. Do we understand this? Can we proceed? The things to learn over here is, this quote endpoint. Whenever you go to Zerodha and put a number also, let's say if you go to Zerodha and say I'm willing to buy 20 lakh of, whatever, Tata, you will see the price moves up by a lot. If you say 2 CR, it will move up by even more. As you increase the quantity that you're buying, you'll eat the order book more and more. And hence, the price becomes worse and worse. That is why they say, if you're ever a whale means person who has a lot of money, then you should not go to one exchange and place an order for $1 million, you should go to multiple exchanges and place orders for 100,000 orders, so that you don't move the market up by so much. A single exchange will become imbalanced. If I go over here and place this order, I will eat up all of these, and hence the price on this exchange will become really high. The price on other exchanges is really low. Then eventually arbitrators come and make the price balanced again on all the exchanges. But if you are a whale, if you have a lot of money, you should not go to one exchange and place a very big order, because then you will start getting worse, even worse price. You will pay 200 also for one solana, because this exchange can only support so many orders, and hence you should just distribute this to 10, 20, 30 exchanges if you're placing such a big order. All right. Shall we do some coding? Shall we try to create a simple order book first? The architecture, even for New York Stock Exchange, actually looks something like this. How do I know? I just know. And a bunch of exchanges also. The architecture looks very similar. Should we proceed? Do we go through the architecture next? All right. Okay. No, maybe 80%. Small break we will take for 4 minutes. Let me look at Q&A really quickly, and then we will proceed.
All right. So, while Harkirat is giving us a break, I don't think so. There is something that I need to remember as such, aside from Binance APIs. Yes. So, documentation, spot, block, API documentation. So this is how they work basically. And according to Harkirat, we gotta keep all the endpoints same, because we don't want to mess up with the exchanges, so that whenever a person have to change from one exchange to the other, he just have to change the URL, and everything else will be the same. By URL I mean the domain name. So that is one reason. Aside from that, I don't think so there was anything as particular that I need to speak about. There are 4 endpoints. One is the order endpoint, one is the delete endpoint, there is the quote endpoint. Quote endpoint is because we can talk about that with ChatGPT for a bit. So, like, every order in actuality is a limit order, because what if someone pays a lot of money and there is a lot of changes in the order book? So when a person was expecting to get 2 stocks, he actually only got 1, because of the and bad luck. True or false? Okay. You are discovering something very market orders are not guaranteed at a fixed price, and because of that, order book changes can affect. Yes. Changes can affect how much you actually see. It's not for regrets. Market orders are real orders. The system does not want to fix price. It simply works through the order book. Order book में seller जैसा है. सबसे you place market buy with 20. I'll get 2 stock with market moves dynamic. Suppose just before you order exit someone stock, and yes, you got a less. Wait, because liquidity changes before slippage. This is called slippage. Alrighty. So your intuition is correct, not my intuition, brother. Markets order depend on live order book conditions, and the order book can change instantly. But why market orders are not limit orders? Because limit order says only execute whatever price are available. Huge difference. Execution liquidity, execution quality changes. Partially market by quantity. Is spending money, not quantity received. Market order depends on available liquidity. Order book changes can reduce quantity received. Fast changing markets cause slippage. So basically, मेरे को लेन like I wanted to buy a $10, but I was forced to buy a $20. This was a slippage because someone else bought it for $10 before me. It's very high speed, right? So to avoid that, we put some constraint, and which is using the code endpoint. This is the code endpoint, delete endpoint, line post endpoint, and the get endpoint to get a particular order. So I don't think so. We have
amount of price I'm willing to pay per unit. The code is similar to the lower and upper circuit on Zelda. No idea what lower upper circuit is. No idea what lower upper circuit is.
Alright, I'm just gonna continue it.
Will this project use Kafka? No, it will use Redis queues. It will not use Kafka. Kafka will be used in the other one, Zapier. I'm looking at Q&A. Why are we building? What are we building? Zerda or Binance? Because in Zerda you can buy stocks in integers, quantities, but in Binance you can buy quantities. You can buy in smaller quantities as well. 1.1, 1.2, whatever we are building. I think you can buy 1.1 stocks in Zerda as well. Am I wrong? I think you can buy fractional stocks on Zerda. As we are building an exchange, is that the recommendation to use something like Rust for performance? Yes. You should not build an exchange in Node.js. At the very least, you should use a faster Node.js runtime like one. Can I attend and build this project without any problem if I haven't watched any classes of 1-200? Yeah, you should be fine. Only Redis class maybe try to go through. Oh, fractional stocks cannot be bought in India. Okay, I didn't know that. US may you can. On Robinhood you can definitely buy, fractional stocks. Solana is hovering around its support. Are you planning to buy more? No. I bought some yesterday. Please post more student design interview questions already. Any question other related to this specific thing that we're discussing today? From where will we'll getting market data? Real-time NSC requires license, but crypto data can be fetched from free. Yeah, we can create a single market. We won't fetch any data. We will create, real market making bots that can, sure, that will need to fetch some data that they can just get it from Binance. Let's say we build it for a crypto market. Even, I'm sure there are APIs that exist to get maybe not real-time price, but, some sort of price for, stocks as well. So we can use that. Is anyone making an exchange? Why doesn't everyone use Backpack, WazirX? Why WazirX exists? No, anyone cannot make an exchange. You will require a lot of licenses and a bunch of things. What database will you use? We will use an SQL database. Okay, someone said, please explain limit and market order one more time. All right, one last recap before we proceed. What are we building? We are building an exchange to buy 5 stocks of Tata for 100 price per unit. I'm willing to pay 100 rupees per stock for 5 stocks, which means I will at max pay rupees 500 to buy 5 stocks of Tata. This is the kind of orders that you place on an exchange, right? But what does the name say? Exchange. They let you, whenever you place such an order, there is someone sitting on the other side who wants to sell 5 stocks of Tata for, let's say, 100 price per unit, and they are expecting to make rupees 500. Whenever you are making a trade on Zerodha, it is an exchange, a swap of assets between two people. How can this swap happen? If there is a broker in the middle, a person who's maintaining a list of who's willing to buy, who's willing to sell. Let's say first this person came and said, KR, I am willing to sell 5 stocks of Tata for 100 price per unit. I expect to make 500 rupees by the end of it. And then someone came and said, I want to buy 2 of these. Then what would happen? This person initially had 5 Tata. 2 of these Tata would go here. This person would have 2 Tata now. And this person is now left with 3 Tata and rupees 200. This is how the first exchange would be made. The first person is sitting on the order book. The second person will come and take the order. This person is the maker of the order. They place the stock on the order on the order book. The other person came and took the order. This person is happy with their 2 Tata stocks. They leave the app, they close their order. This person is still waiting. Here, 3 of my stocks are now still sitting on the order book. Then let's say another person comes. They say, I want to buy 5 stocks of Zero. Expect to shed out rupees 600. I have 600 rupees. I'm willing to give 600 rupees. I only want 5 stocks in return. What would happen? Firstly, this order would get matched to something that already exists on the order book. This person is willing to sell at 100. This person is willing to buy at 120, which means 100 पे order match हो जाएगा. This person doesn't need to pay 120. They can just pay 100 because already 100 rupees का order exists on the book. This person will get 3 stocks of Tata. This person will pay rupees 300. And this person is happy now. They have rupees 500. All of their Tata stocks are sold. This person has bought 3 stocks of Tata, but they wanted to buy 5. 2 are still left. And hence, now this person will sit on the order book. Here I want to buy. All these orders that are being placed are market orders. Why are all of these orders market orders? Because whenever someone is giving the quantity, they're also giving the price per unit. Okay, I want to buy X, but I am price sensitive. If no order is available or no stock is available for 120 or less, I will not buy. This is what's called a market order. What is a limit order? This is what's called a limit order. My bad. This is what's called a limit order. What is a market order? Okay, I don't care about price per unit. I just want to shed rupees 600. I'm going to spend 600 rupees. Whatever price is there, it is fine. It's like a rich person coming to India and saying, yeah, yellow 20 CR, give me as many houses I can get in this specific society. But when that person comes and says, yellow 20 CR, give me whatever price, everyone in that society will increase their price, right? Everyone in that society will be like, nahi, some whale has come, let's increase our prices. Hence, even if a whale comes and places a market order, they should give some constraints along. Kya dekho, I am willing to spend 20 CR, but I know the fair price here is 3 CR. So at max, I will spend 3.1 CR per house. Don't increase the price by too much just because I have come. So their market order will also get converted into a limit order. They will first ask the society, get a quote from the society. Kya, what is the average price right now? The society chairman will be like, sir, 3 CR. They will be like, I'm buying a lot of houses, so the price will move up by a bit. I'm giving you 20 CR. At max, 3.1 CR per house. Usse upar nahi jana chahiye. I will not pay a penny more per house. And then some of these orders might get matched. This person might be able to buy 4 houses. And this person then might sit on the order book of the broker. 8 CR is still left. If anyone wants to sell a house, this person is willing to buy at max 3.1 CR per house. That's what a market order is. All right, let's proceed. Let's get into a little bit of the coding, not too much. The architecture of building an exchange is actually fairly complex. Let me think if you want to go through the architecture or if you want to code a bit. If we go through the architecture now, this will purely become a system design class. We will not be able to proceed at all. So I'm happy to just do a quick poll over here. Akash, let's do a quick poll. Should we go through the architecture of a real exchange or should we start coding? Not move forward. Sorry. The question is, socket docs here as well. Should we do socket layer? If you go to the Binance docs, you will see all the WebSocket docs here as well. Should we do that or should we start coding? Not move forward. Sorry. The question is, should we do system design? Should we code? Can we create another poll, Akash? Sorry about that. Because each one of them is going to take an hour. If we go through the code, it will take an hour. If you go through the system design, it will take at least 30-40 minutes. So what do we want to go through? Okay, Akash, don't create a poll. Let me create a poll, okay? Just don't touch the poll right now. Alrighty, clear winner, system design. Cool, guys. There are a lot of things.
I think we are going to do some system designing today for the very first time. Good thing is that I have a hunch of like how everything is working so far, and the only thing that will be left is the architecture. So from tomorrow, maybe we can just start continuing to code, or like maybe at the midnight today, I will start one more stream and we can go from there. So let's see how much we can adapt, how much we can learn. But yeah, um, let's just continue. Or maybe like one more thing that Harkirat mentioned today was that for this at least I'll have to look into the Redis class at least. So maybe I'll go back and do the Redis class in the evening. Let's see. And also maybe Docker, because that is also one thing that is left for me. We can go through that, but that's it right now. Let's just continue the system design portion of it. Yeah, whoever is coming right now, we are just like I'm just following this guy's cohort. He's telling us how to make the architecture for the exchange. This is a legendary guy. He teaches really well, and like till now we were studying about how the order books and like how everything else happens in the exchange. Basically, like the order book. What is the order book? What are like the bids? What are the asks? What are limits? What are markets? All the jargon that is related to exchange. Now we are proceeding, like we are halfway through there. We are just proceeding towards making the backend architecture. This is a system design, and yeah, that's it. I'm muting myself, and let's just start the system design portion.
At all. So I'm happy to just do a quick poll talk not when it changes. Until now, we have built applications like this. There is a backend server. A request comes to the backend server, usually hits a database, gets back a response, and then that response gets returned back to the user. That is how we have built backend servers until now. Order books are very different. Order books are the core of what we're understanding. Of course, there is a database. If I go to this website, all these trades actually come from a database. But this order book right here does not exist in a database. Order books are in memory. I repeat, order books are in memory. They are a variable in a Rust slash Golang slash JS process. A single threaded process. Whenever you are creating an order book, even for something like New York Stock Exchange, there is a single process that is running. Let's say node index.js, where there is a variable called const order book equal to these are the bids and these are the asks. The bids and the asks are not stored in a database at all. They're stored as a variable in a process. There are a lot of downsides to in-memory data. What if this server crashes, this data goes away? Yeah, that's the only. If I go to this website, all these order. Alrighty, clear winner, system design. Cool, guys. There are a lot of things that are fairly counterintuitive when it comes to building an exchange. Until now, we have built applications like this. There is a backend server.
Just give me a 2 minutes break. All righty, let's continue. I have done most of the things that I wanted to in my break. Let's just continue. Chalo.
A request comes to the backend server, usually hits a database, gets back a response, and then that response gets returned back to the user. That is how we have built backend servers until now. Order books are very different. Order books are the core of what we're understanding. Of course, there is a database. If I go to this website, all these trades actually come from a database. But this order book right here does not exist in a database. Order books are in memory. I repeat, order books are in memory. They are a variable in a Rust/Golang/JS process, a single threaded process. Whenever you are creating an order book, even for something like New York Stock Exchange, there is a single process that is running. Let's say node index.js, where there is a variable called const order book equal to, these are the bids and these are the asks. The bids and the asks are not stored in a database at all. They're stored as a variable in a process. There are a lot of downsides to in-memory data. What if this server crashes? This data goes away. That's the only downside really. Everything else is upside. The other downside is you can only store so much data on a machine, on a single machine. In memory you can only store. Order book right here does not exist in a database. Order books. Clear winner, system design. Cool guys. There are a lot of things that are fairly counterintuitive when it comes to building an exchange. Until now, we have built applications like this. There is a backend server. A request comes to the backend server, usually hits a database, gets back a response, and then that response gets returned back to the user. That is how we have built backend servers until now. Order books are very different. Order books are the core of what we're understanding. Of course, there is a database. If I go to this website, all these trades actually come from a database. But this order book right here does not exist in a database. Order books are in memory. I repeat, order books are in memory. They are a variable in a Rust/Golang/JS process, a single threaded process. Whenever you are creating an order book, even for something like New York Stock Exchange, there is a single process that is running. Let's say node index.js, where there is a variable called const order book equal to, these are the bids and these are the asks. The bids and the asks are not stored in a database at all. They're stored as a variable in a process. There are a lot of downsides to in-memory data. What if this server crashes, this data goes away? Yeah, that's the only downside really. Everything else is upside. The other downside is, you can only store so much data on a machine only. What if this server crashes? Is a single process. Whenever you are creating an order book, even for something like New York Stock Exchange, there is a single process that is running. Let's say node index.js, where there is a variable called const order book equal to, these are the bids and these are the asks. The bids and the asks are not stored in a database at all. They're stored as a variable in a process. There are a lot of downsides to in-memory data. What if this server crashes, this data goes away? Yeah, that's the only downside really. Everything else is upside. The other downside is, you can only store so much data on a machine. On a single machine, in memory you can only store, let's say 2 GB of data. What if there is more orders that exist? Realistically they won't, but what if it happens? So these are downsides of storing in-memory data. This is why we have never stored in-memory data. Have you ever seen us be like, we are creating a website, let's create a user's variable over here, and whenever a user signs up, I will just put an entry over here, a new user has signed up, their name is Harkirat, and whatever username is something and password is something. We never do this. We take this data, we put it in a database, because servers are ephemeral. Servers die from time to time. You might want to have multiple servers, so how will they share data with each other? And hence all the data is usually stored in a database, but that is not true for an exchange, or specifically for an order book. Why? Because order books need to be really fast. This is not close to as active as this was when the exchange was doing $1 billion. For example, right now it did like $3 million in the last 24 hours, right? This number was up to $1 billion during one peak hype. This book was changing absurdly, like really fast. If you have a database, this is your backend. If someone comes and changes the book, eats the book, does whatever, places an order, that data will first go to a database. You will first be like, acha, data ho gaya, change. Then you will return this to the front end. It's absurdly long for a use case like this. This use case needs to be milliseconds. That's why people say exchanges need to be fast, or even market makers need to be really fast, because even if you are late by 0.1 second or even 0.01 second, you've caused them a lot of financial damage. Market makers won't trade on your platform unless when they send a request to /API/v1/order, within a few milliseconds, they get back some response that says, okay, the order has been placed. You can't wait for this order to come and then put it on a database and then wait for database to respond and then respond back to them. That will take, let's say 0.5 seconds, which is a really long time. Hence, you always have in-memory order books. Harkirat, does that mean that I have a server where if someone comes and places a request /API/v1/order, I have a variable here called order book, which has a list of bids and asks. Anytime an order comes, I just update this variable and let the user know, okay, hey, this is done. Is this what happens, Harkirat? This could happen. This is actually the fastest that you can do. If someone places an order, you update the variable over here, you return back to the user, your order has either been placed on the book or has been executed, and let the user know you're good to go. This is the fastest way to do it. If I quickly open an empty index.js file and do a const express equal to require express const app equal to app.post /API/v1/order. If I simply do this const order book equal to an object asks empty array bids empty array. Anytime a request comes, I simply, let's say, push it to the asks for now. Okay, order book.asks.push request.body and return to the user, okay, your order has been placed. This is as fast as it gets, right? You got the data from a user, you put it in a variable, you return back to the user. If I had a await prisma dot whatever asks dot update over here, this would take a decently long time for it to reach the database, and then eventually I would return the user. So this would be really slow. So this is the ideal way to store the order book. The order book that you see over here is actually stored in a in-memory variable like this in some Rust or JavaScript process. Question is, what is the downside of this approach? Good to go. Anytime an order comes, you can match the order to the current order book. Check if the order can somehow be matched to the bids and the asks. If it can, then return the user, your order has been matched, swap the assets, or place the order on the order book. Take the order from the user, put it on the order book, push it to either asks or bids, return to the user, good to go. This is great, but what is the downside of this approach? The downside of this approach is, if the server ever dies, this variable dies with it. If you have if someone has come to your website, let's say a market maker has come to your website and they have placed an order of 135.55 we want to buy 10 assets, and you've told them done, you need to make sure they exist on the order book, or they eventually get matched and they get back your order was filled. You can't just be like, sorry, our server died, and then when you restart the server you have empty bids and asks. They need to be stored somewhere, so that whenever the user, in case the order book does die, whenever the order book comes back up, it is able to retrieve this data that was placed by the market maker a while back.
I was thinking the exact same thing. So this was my understanding of it as well, that if we are maintaining a real-time order book, then definitely the fallback to it would be just save it somewhere, right? That would be the ideal way of doing it. So let's see what happens ahead of this.
How can you do that? In the real world, these order books are literally a process running somewhere. There's a Binance, BTC, USD order book one that's running, and then another order book for, let's say, the US folks, because the US people can only exchange with the US people. They have a restriction like this, so they have two order books running like this. In case it ever goes down, Binance does publish this on their Twitter. Our BTC USD US order book is down right now. We are working on fixing it. No one can trade it during that time. If you go to this page, you see empty over here, you see nothing over here. The page simply says the order book is down. Whenever the order book comes back up, whenever their servers come back up, whatever happens is when they republish, okay, the order book is back up. The question is, how do they recreate the state on the server? How do you recreate this state if the server dies? And the answer is, you of course have to store data somewhere. You cannot simply do this. Okay, request came, put it in a variable, return back to the user. This would be nice, but you cannot do just this. You also have to store the data somewhere. Harkirat, what if I do this? I will, do something like prisma.db.update and, store this data eventually. I will not await on this. If I don't await on this, Harkirat, then, this, I can return to the user immediately that your order is placed. And, in some while, I will update the database. What is the problem here? Okay, what if the database request fails? It might happen the database is down. You're not able to reach the database. You told the end user, okay, the request has succeeded, their order has succeeded, but their order hasn't reached the database. So you cannot do this. Okay, I will eventually store in the database and let the user immediately know your order is done. You cannot do that, because if this request fails, then you told the user order has been placed, but it hasn't reached your database. You need to ensure you have stored this information somewhere so that you can recreate state from it. You also need to make sure you immediately return to the user something has happened. There are a few approaches on how you can do this. The approach that we will take is, when that the order comes, the order will come to an API server. Simple. What was the API server for Backpack? It was this, api.backpack.exchange/API/v1. This is the Backpack API server. This can be scaled. You don't have to have a single process for this. The order book, as I said, needs to be a single process. The BTC USD order book is a single process that exists somewhere. You cannot scale it horizontally. But this API server, api.backpack.exchange, this is the first API server that you see over here where the user interacts. This can be horizontally scaled. You can have multiple servers like these. When a request comes, when app.post happens, rather than updating the in-memory variable here, this server isn't the BTC USD order book. This is a global server. This needs to talk to the order book. This needs to tell the order book, कि यार एक नया order आया, a fresh order has come, please process this order. And this communication happens via a queue. This queue is your storage mechanism. This queue is something you persist forever. Okay, all the events that have happened in the since the exchange started, every order that was placed went through this queue to the order book, and hence this queue is, your source of truth. If you ever want to recreate state, if you ever want to recreate the current state of the order book, if it goes down, you can just go through all these events that have happened since the beginning and recreate the current order book that existed before the process died. This is how you can have a slightly faster system. Of course, it is not as fast as this. This is as fast as it gets without this update. Okay, you just update it in the in-memory variable and return to the user. But this does not work because you have to persist the data somewhere. And this is how you can achieve persistence. You first send it to a queue. Redis queue is what everyone uses and what we will use as well. This order that the user placed, let's say look like kind buy, they wanted to buy. They were placing a limit order for this price, this quantity on the Tata INR market. This order reached the server. The server fetched the user's cookies, understood who the user was, attached the user ID, created a random order ID, attached the order ID, and put this onto a queue. The order book is a separate process running somewhere else. This order book is, number one, not exposed to the world. Any browser cannot just hit your order book. That would be a weird security flaw. I mean, you don't want this order book to be exposed ever on the internet. So this is behind a bunch of firewalls. This can read through the queue and start to process all of these messages one by one sequentially. I repeat, there is no parallelization here. This is a completely single threaded process. It will pick the messages from here one by one and process them one by one. It will not try to spawn threads like you can in Java or even in Rust. You have a single threaded in-memory process, single threaded process that's storing data in memory. This order book will of course, then maintain an in-memory variable based on the current order book that exists. Based on these orders, if this order comes and says, I want to buy, sell, whatever, it will either be able to match the orders, fill the orders, or it will update the in-memory variable of the order book. Anytime there is a match that happens, there is a fill that happens, it will push this onto another queue. I repeat, anytime an order happens, a swap happens, it will push this onto another queue. Okay, these are the events that have happened. I was able to fill half of the order and I was able to update the book. The order book has been updated because this order was, let's say, partially filled. I wanted to buy 200 rupees. I was only able to buy one quantity and the other quantity now exists on the order book of the Tata INR market. This queue is what the WebSocket server then reads from. And then the WebSocket server lets the user know कि आपका आधा order place हो गया, half of your order has been placed, the other half, or the order book has been updated to have this updated quantity. As you can see, these quantities here are being updated, right? We need a WebSocket server that users can subscribe to and get the updated events of an order book. So anytime an order book changes, anytime there is an order that matched over here, the updated quantity at a certain price, I repeat, at this price 134.59, the quantity is 0.81. At 134.65, quantity is this. Anytime an order is changed on this level, it needs to reach the user through the WebSocket layer, and hence the WebSocket servers are also subscribed to this queue over here, and they're the ones that let the end user know this thing has been updated. Let's quickly look at the same thing from this perspective. If I go over here and place an order of, let's say, $100, let's say it's a limit order, $100, this will be the price per unit, and I want to buy, let's say, 1,000 units. If I click on the buy button, a request will go out here to an API server, to api.backpack.exchange. The API server will push this onto a queue. There is an order book running for this market. The sole USDC market has an order book running. What is an order book here? It's just a Node.js process that is running, a Rust process that is running, that is subscribed to this queue. It is constantly running an infinite loop. Is there something I need to process? Is there something I need to process? Anytime I get something it needs to process, it starts to process it, which means it will check, can this order be filled? If it can be filled, great. If it cannot be filled, it pushes it onto the order book. Anytime one of these events happens, either the order book gets updated it onto the order book. Filled, if it can be filled, which means anytime I get something it needs to process, it starts to process it, which means it will check, can this order be filled? If it can be filled, great. If it cannot be filled, it pushes it onto the order book. Anytime one of these events happens, either the order book gets updated or an order gets matched, it sends it onto a queue. Why? Because the WebSocket server eventually needs to pull this from the queue and let the user know, okay, this thing has happened. If I go to the trades section over here, these trades also get updated in real time, right? So anytime a real match happens, a trade happens, it needs to reach a queue from which it reaches a database also. This queue is subscribed by another database poller that's backing everything up in a database. But also, over here, this queue is also being pulled by another price poller that's, updating this prices table. Anytime a match happens, anytime two people exchange, is when the price of that asset changes as well. So there's another process. There are a bunch of processes that are subscribed to this event queue. Okay, kya ho gaya? What all events have happened? Has the book been updated, or has an order been made? Because anytime an order is made, you need to update this price. You need to update, let's say, the chart information. You need to push onto this specific trades database. This final data exists in a database only. This is not in memory. Only the order book is in memory. Only the order book needs to be really fast, and hence only this order book is in memory. Everything else is, eventually stored into a database. One small thing I will add, and after that I will open it up for questions, is that this order book actually talks back to the API server as well. I repeat, whenever you send a request, it reaches the order book, and if the order is partially filled, fully filled, whatever happened, the user needs to get back this information. The user in the same request needs to get back, कि आपका order आधा fill हो गया, partially it has been filled, rest of it is still existing on the order book. So this order book actually needs to talk back to the API server. So this API server is also subscribed to this queue, but we'll get there when we get there. Why do we have to do this? Because if you look at the Binance docs, you will see anytime I place a new order, if I send a request to, /API/v3/order, the response that I get back tells me how much of my quantity was executed, how much of the order was able to be placed in the same request response. And hence, when I'm sending a request, this will forward it to the order book. Order book will partially fill it, fully fill it, publish an event. This order ID was partially filled, and this event will reach this API server again, which will respond back to the user. This is how your order was partially filled. Why was this complicated architecture built, Harkirat? Why can't I simply do this, Harkirat? Yahin pe I will publish to the queue as well. I will update the in-memory variable, and here I will do redis dot queue dot push a specific event. You can also do this. This was also discussed. Here only you can have the order book, and this can just eventually keep pushing to a queue. The problem is the user shouldn't directly be hitting your server that has the order book. Users can overwhelm it. You cannot protect it from the end users. You cannot horizontally scale the API server then, and hence the order book is a separate process. The API server, which is exposed to the users, is a separate process. Both of these are connected via a queue. This is a general architecture. Let's quickly look at the WebSocket layer as well.
Yep, all right. So he just explained us why we need to have the order book in real time in the memory, and like how. So basically, I'll just type out my understanding of everything that has been going on. To be honest, it was quite confusing. Even I was not able to uh, go along go along with the entire explanation of it. But from whatever I experienced, or whatever I understood, basically the order book is something that is very important, and it keeps changing live in real time. Alright, so it keeps changing in real time. It's very important. It's like a pulse rate. It's like a pulse rate, because if a person sees the order a little late, they'll buy according to it. One portion of it is this, that if the order gets a little late, the person will buy according to it. And also, like, a user will have to wait to see his stocks getting bought reflected slowly, which might be really bad. The reason for it is because, imagine if I just bought something, right? And it did not get reflected, and now I see the price has risen, and then it gets reflected. So is like there might be a chance in which I might have bought that particular thing at a little higher price. So like there might be a chance where I bought something at X but had to pay 0 1.1x of it as the market grew a little high till the time my order book got updated. Might be. Then what happens is, so to render this, so to solve, and we can't also just make the order book completely in memory, right? We can't do that either, because what if there was this particular line, what if the server dies and the order book dies with it. So gotta have an architecture that can we need to have an architecture that can perform both of these, so getting reflected ASAP but also guarding the security. This was the understanding, right? Now the architecture is to hit the API server and the request goes to a queue. Now it's a queue that shows that it will be behind the latest order. So imagine, like, if there are 20 people, right, and even if the execution is taking a little more time, if a queue is present, I think it will never mess up with the request flow. If a person requested before someone else, then he or she will get it earlier. So that is my understanding of it. That shows that it will be behind the latest order, and hence no chance of betting over the wrong judgment, wrong entry, wrong betting over the wrong data, wrong or wrong. I think rather than wrong, it should be like off data. Okay. Then from the queue, the response will be generated like, okay, whether the order was matched. If yes, then that will happen. If not, then add it to the order book and also respond back to the client, to the API server, so they know what happened. Alright, now the last bit of it was alright, wait a second. So this was the last bit. Okay, after getting order filled or book update, it should to also go into a queue and then to a WebSocket server. So this was a part which I don't understand, to be honest. Now after that, it again, so like why a particular order should go to a particular queue after getting executed, right? Maybe to store it. Now after that, I think it is where the saving database part comes in. So like adding that to the queue for the same reason, again for the same reason, like adding the order getting executed, that too. So like adding order getting executed to the queue for the same reason as above, and then forwarding it to a WebSocket. I think a WebSocket server to constantly to the updated order book. This is my very broken understanding of whatever happened till now, and let's see how much wrong I'm saying everything. You are thinking like someone designing a real exchange, you're not just using one. And yes, the core problem identified is exactly the range. Exchanges are fundamentally a consistency versus speed problem. Ultra fast updates, correct order sequencing, durable storage, real time market data, no double execution, no stale order book, all simultaneously. That is very hard. Your biggest correct realization, order book is like a pulse rate. This is actually a fantastic analogy. Oh my, okay. The order book is a live, constantly changing state machine. Order arrive, order cancel, trade happens, liquidity changes, best bid ask changes, and traders react to the live information. If someone sees old order book, they may trade on stale data. So I think my assumption was correct. If the order book is not getting reflected in real time, then it might be a real problem because they will work on the stale data. So this should happen very fast. And in real trading, this is extremely important. Millisecond matter in HFT systems. Your slippage understanding is also good. I thought I'd buy at X, but actually paid 1.1 because market moved. Yes, that is exactly slippage. And it happens because order book changed before during execution. Your memory constraint is also correct. We can't only keep order book in memory because server may die. Correct. This is one of the hardest exchange architecture problem because in memory is equals to fast, but persistent storage is equals to safe. You need both. Real execution architecture idea. The architecture is very close to real system. Step by step repeating. Client send orders. Okay. The client is send the order. API server validates, checks, auth, balance, order format, rate limits, assigns order ID. So rate limits, assigns order ID. Order index query because queues guarantee deterministic ordering. All right, this was also correct. I guess right. Deterministic ordering, meaning order A before order B always processes in that order. This prevents race conditions. Excellent understanding by you here. Matching engine consumes queue. This is the real heart. Update in memory order book, check up matching, execute trades, partially fill orders, update liquidity. This might be extremely fast, usually entirely in RAM for speed. Okay. So this should happen in my system. No, but this is after server. This is after server, so how will this happen in RAM? Event generation. After processing, events are created, order filled, order placed, or updated, trade executed. Persistence layer. Now database. Now the durable write happens. This is important. Database is usually not the matching engine because DBs are too slow for ultra HFT. Instead, matching engine first, database second. Often thought. WebSocket running. Correct again. WebSocket server push, order book updates, trade client live without polling. One very important architecture concept. Event sourcing, meaning instead they store every event. If request comes to servers and queues, how it? The answer is the matching engine itself is a long running in memory process. Your API server receives request, but it is not the exchange brain, it is just the gateway. Browser to API server to queue to matching engine continuously alive in memory. Then what does the queue? The queue feeds. No. Wait. So like first I will head from my browser to the API, and then the order book matching engine thing will happen in the RAM of my browser. Or in like the machine's RAM. Server's RAM. Yes. Queue receives it. Updates RAM. Result sent back. WebSocket pushes the updates to browser. Alright, we can continue, I guess. So I don't think so anyone wants the explanation, but basically what happens is, first there will be an browser client which will hit the API server. In the API server, it will take the request and it will proceed it towards the queue. The queue is important because we want to maintain the sequence of the operation or the request that has happened, the processes that has happened. So the uh, deterministic states get maintained. Now moving forward, what happens is the matching engine is what the order book uses for the matching of the entire order book or the orders that have been placed with the server. It either matches the order or it just updates it in the order book, and then from there it gets transferred to another queue. Again, the queue is important because we want to know that which particular process was executed first and then what particular process got executed after. Now after storing those things, it will be going to the WebSocket, which will try to maintain the live connection with the live connection with the browser. So yeah, this is the basic understanding of the entire.
A separate process. Both of these are connected via a queue. This is a general architecture. Let's quickly look at the WebSocket layer as well. The way the WebSocket server is built is also purely based on the Binance API. You open Binance and you look at it. There, how do you get real-time data from Binance? For example, in case you want trade streams, what are trade streams? Okay, what all real-time trades are happening right now? The Binance API says कि यार हमारे WebSocket server से connect कर लो, connect to our WebSocket server and send us one event that looks like this. कि you want to subscribe to this symbol at trade. You want to subscribe to all the trades that are happening for this symbol, and we will start to send you all the data. If you look at the WebSocket server over here, even on Binance, if you open Binance, you'll see the same thing. If I refresh this, you will see I create a WebSocket connection. Let's see if we can find it. Acres, depth. Am I looking at all of them? Settings, looking at all of them. Let's open this in Brave. I'm not able to search over here in the network tab. Let's refresh. Let's search for stream over here. There you go. ws.back. Let's search for stream over here. There you go. ws.backpack.exchange. WebSocket server.backpack.exchange. Look at all the messages. I'm receiving a bunch of messages from the server. Ignore them. If I click on trades, would have hoped I would have sent out a message. Let's try that one more time. Book trades. Let's try it on Binance. Binance USDT BTC. Does not open. Let's refresh again. Let's change the page. Let's change the market only. Let's go to markets. There you go. Do you see 3 messages? It said, I am unsubscribing from the ticker for Sol USDC. I am unsubscribing from the depth of Sol USDC. I am unsubscribing from the trades for Sol USDC. What was the Binance API like? The Binance WebSocket API said, okay, whenever you want to subscribe, right? Whenever you want to subscribe to any real-time feed, just send me the symbol, and at the rate of trade, I will start to send you all the trades. If I reopen this market, if I again go to, let's say, Sol USDC market, you will see I send the messages to the WebSocket server. I am subscribing to all the trades that are happening on Sol USDC, the depth of Sol USDC, and the ticker of Sol USDC. What is the ticker? This thing right here. I want all the real-time updates of this guy. What are the trades? Everything right here. I want all the real-time updates here. What does the book? All the real-time updates over here. These are the 3 events that I send it. And eventually when I move off the book, I still maintain the same connection. I unsubscribe to all 3 of them. I am now no longer receiving those events. What does one of these events looks like? If I copy this event and open it in Visual Studio Code, it says, this is the depth. The asks for 134.40 price has been updated to this. 134.41 price has been updated to this. And the bids haven't been updated in this specific tick. But the asks have been updated, this specific 134.40 quantity, I repeat, 134.40 quantity over here has been updated to X. You just get all of those real-time data from the WebSocket server. This is something also we will have to build almost exactly the same way. If you're building an exchange, you want to follow the same API as another exchange does, so that traders can directly connect to it. But I will take a pause here. This is the difficult architecture / the perfect architecture. This is a simpler architecture that we were supposed to code today. Okay, you send a request, it reaches the server, which itself is your order book. We don't worry about recovery logic too much, and we let the user see and directly talk to our order book server. This was the architecture we were about to build today. We'll probably just build the right one tomorrow. But this was just a more trimmed down version of the original architecture. This is the code for the trimmed down version in case you want to look at it. Let me take you through it very briefly, or maybe let's do a quick poll to see where we're at, and then we will proceed. The poll is going to be, should we proceed to the code a little bit? Shall we read through the code a little bit, see what it does? Yes or no? I can also just run the code and show you the final output, not take you through the code. And if you say no, then we can, discuss more on the architecture. Should we proceed to the code? Yes or no? Yes. Yes-ish. Okay, let me take you a little bit through the code, show you what happens when I run this code, show you how you place orders, how the order book gets updated, and then, happy to discuss the architecture more. Tomorrow, we will try to code this architecture. We will try to support some endpoints. They will go through an API server, through a queue to the order book. Order book will spit things out to another queue, which will get read by a WebSocket server. We'll try to complete the backend tomorrow. Before that, let's warm up a bit and understand what exactly happens over here. This is the most, mathematical / DSA part of this whole architecture, because you have to maintain bids, match bids, find the best offer for a person and match it to the order, the request that the user sent. So, this requires some mathematics. Everything else is, simple full stack stuff. Let's look at the final output of this. This code is present on whoopsie daisy. Code100x.com / 100x devs cohort 2 / Let's look at the final output of this. This code is present on whoopsie daisy. Code100x.com / 100x devs cohort 2 / week 30 order book 1. You can find the code over here. So if you open week 30 order book 1, you'll find a folder called API server, which is, basic implementation. Let me open this up really quickly and show you just the outputs to begin with. Let me compile the code and let me run the code. This code will log a bunch of things. Specifically, it will log the order book. So let's look at what the order book looks like if I place a few orders. Let me open this on the right. Let me open Postman on the left. How do you, never mind, let me full screen this. I want to place an order, let's say, just to fill the order book. I repeat, what do the market makers do? They fill the order book. Okay, there are some bids, there are some asks. Let's first fill that. Let's say a market maker comes and says, yeah, Bitcoin ka current price kya hai? Bitcoin is currently trading at 64,254. So they can come and say, yeah, for the BTC USD market, I am willing to sell my US dollars for $70,000 because the fair price is 64,000. I want to sell it for much more than that. If I'm coming to your exchange, I'm providing liquidity there. I need some incentive. So my incentive is, okay, by very high price, I am willing to sell you 10 Bitcoin for $70,000 each. I'm willing to sell. I'm creating a limit order. I'm trying to sell Bitcoin. This is the price per unit, and these are the amount of Bitcoin that I have that I'm willing to sell. It says order executed quantity is 0. Why is executed quantity 0? Because currently no orders exist. It's a empty order book. If this website had a UI, then that UI would have this completely empty. It would not have any books, orders just yet until I place this order. Now that I've placed this order, one thing is sitting over here. Okay, I'm willing to sell at $70,000. You would see one entry over here. Let's add a little bit more. 71,000 pay I'm willing to sell, let's say one. And 80,000 pay I'm willing to sell one, so on and so forth. Now my order book is slightly filled. It would have 3 values over here. If I open Visual Studio Code, I'm not logging things when I should be logging them. Let's log the order book over here so we can see it after every request. Let me place a few orders again. 80,000 pay, I placed the order thrice. What does the order book look like? Here asks, there are 3. There are 3 orders that currently exist. They have the same price. Iska bhi price 80,000, 80,000, 80,000. Willing to sell one, willing to sell one, willing to sell one. There is another variable here called books with quantity. We will see how these are filled eventually. But this book with quantity is what the end user sees over here. I don't see that there are 5 orders on the same price. This whatever 148 quantity might be from various users. The end user doesn't see that. I don't see the actual picture of how many people have placed this order. I just see the price and how many net quantities available to be sold. This variable that you see here, books with quantity, is exactly that. It's what you would send on to the front end. Here, for every price, this is the quantity that is currently available. Let's restart the process. Let's again send a few requests. And now you will see the order book is fairly complicated. It has, 3 orders sitting on the ask side. 3 people are asking 80,000 rupees mein bechne ko taiyar hu. This is my ask. Books with quantity is a slightly more readable representation of this. Here at 80,000 rupees, 3 quantities are available. This is what would appear on the front end eventually. At X rupees, this much quantity is available. At X rupees, these many asks are available. Let's put something on the other side as well. The same market maker can be like, fair price to 64,000 hai na. I'm willing to buy it also, but for 50,000 only. I'm willing to buy for 50,000. I'm willing to sell for 80,000. The spread of this exchange is really high. Let's say we place a few orders here. Now, if you look at it, the order book is slightly more liquid. If this was on a front end, what would the front end have? The front end would have one entry over here and one entry over here. 80,000 rupees, 4 quantity over here. 60,000 rupees, 4 quantity over here. 4 and 3. This is what the front end would have. This is your real set of orders. Now let's say a real user comes. Someone wants to place a market order. I'm willing to buy
Extremely tired right now. It's been a while since I've been streaming. I feel so sleepy. It's been 3 hours. Oh, it will take 1 more hour to complete this. I will though. Alright, let's focus.
Bitcoin.
So far he's just telling us like there is this particular code that was present in GitHub, which was later cloned by Harkirat. Now it's present in his machine. Now he's running that. It has a very simple order book server, and what is happening over there is pretty much he's reflecting that by sending request that has like price and quantity. There are 2 types of things. One is the order book, I think, and the other was the price by quantity. So if there are like 80,000, 80,000, 80,000, 80,000, 80,000, 80,000 five times, and quantity is like 1 1 1 1 1 each time, so it will be reflected in the order books ask. And if the price by quantity is seen, it will be actually showing like 80,000 five times. So that is something that is happening right now. Let's move forward and see what else.
For 1 lakh rupees. I repeat, they say, okay, I am the very rich. I am willing to buy one quantity, or let's say two quantities, and I'm willing to pay 1 lakh per quantity. Then should this order get matched? There is someone who's willing to pay 1 lakh per Bitcoin, and there is someone who's willing to sell at 80,000 rupees only. So can this match happen? Yes. This user doesn't even have to pay 1 lakh. It is great that they're setting a limit of 1 lakh, but even if they set the limit of 90,000, their order would have been matched. Even if they set a limit of 80,000, their order would have been matched. Of course, if they set a limit of 70,000, then they would also sit on the order book. There would be another row here where someone else is willing to buy for 70,000. Let's put this 70,000 order here as well. Now if you look at it, willing to buy at 70,000. Huh. Oh, I put 700,000. That's my bad. I was supposed to put 70,000. This guy came and said, I'm willing to buy at 700,000. So kya ho gaya? This asks sort of, started to get removed. This asks, someone was willing to sell at 80,000. Someone came and said, I'm willing to buy at 7 lakh. Then, the match was made. This quantity went down from 3 down to 1. Then again send a request. Then this went down from 80,000 to, of course, 0. And the other person should be sitting on the order book with quantity of 1. There is a bug somewhere.
Is my stream running? I think my stream is running. Why is this lagging? Everything is working fine. What happens?
Where this quantity should be 1 over here.
Alright.
Because 3 were available and 4 this person tried to ask for. 3 of them got matched. This person can now be moved off the order book, or this can be removed from the order book. And there should be 2 asks or 2 bids right now. One for 50,000, one for 7 lakh rupees. This is the final output of the code. How does the code work? Firstly, there is a bug in the code. I was clearly able to see this should be 1. Let me place another order here. And now it is going up. 7 lakh pay. Someone is willing to buy at 50,000. Someone is willing to buy at 7 lakh. But at some point, I think there is a bug here. Maybe not. Let's look at the code. What does the code look like? It's fairly complicated code. The user sends a request. 7 lakh. Let me place another order here. And now it is going up. 7 lakh pay. Someone is willing to buy at 50,000. Someone is willing to buy at 7 lakh. But at some point, I think there is a bug here. Maybe not. Let's look at the code. What does the code look like? It's fairly complicated code. The user sends a request. You parse their request using Zod. So you first make sure they're sending you the right things. The base asset, the quote asset, the price, quantity, side, type. And ignore what this kind is. We'll come to what this is maybe tomorrow. Or maybe right now. Yeah, this is also important thing, like an important thing to know. If you are retail, I repeat, if you are this person who came over here and doesn't understand market orders, limit orders, and you wrote, I want something for $10,000 and placed an order, would you expect to be partially filled? No, right? You would not want that partially fill ho gaya and rest of my order exists on an order book. You would want immediate or cancel. What would you want if you are creating a market order? Here I want my market, under the hood it's still a limit order, right? Under the hood, it is still sending a limit price. Okay, this is the current price. We will give you some extra impact on top. Under the hood, it is still sending a limit order. But since the user is on the market tab, you need to make sure their order immediately gets filled or cancels. It shouldn't partially be filled. That is what this kind field over here represents. If the user wants, they can send the IOC flag, or they can send the type of the order, immediate or kill, or immediate or cancel. This basically means whatever quantity the user wants executed, either the complete quantity executes, or you tell the user, sorry, we don't have enough liquidity for you. We could not match all of your orders. Immediate or cancel. That is what this last field means. Let me take you through the code, but if you don't understand it, it's fine. We'll go over it tomorrow again. This is the route that gets hit. You parse the input, make sure that the user's input was correct. The user hasn't sent you any wrong input. If I do send a wrong input, for example, if I go to Postman and add a random field over here, name something random, or change this to a number from a string. Then I get back some error response. If I put some extra fields, then Zod does not complain. But if I literally change the structure of what I'm sending, rather than sending a string, I send a number, I get back Zod errors that say expected string received number, expected buy or sell received a number. So that is what this Zod check does at the very top. If the not order.success, we return was correct. The user hasn't sent you any wrong input. If I do send a wrong input, for example, if I go to Postman and add a random field over here, name something random, or change this to a number from a string, then I get back some error response. If I put some extra fields, then Zod does not complain. But if I literally change the structure of what I'm sending, rather than sending a string, I send a number, I get back Zod errors that say expected string received number, expected buy or sell received a number. So that is what this Zod check does at the very top. If the not order.success, we return all the error messages to the end user. If the user has sent us the right things, we get the base asset, quote asset, price, quantity, side, and kind. We create a random order ID for the user, and then we check, is this the right order book that you're hitting? This is the code for the BTC USD order book. If I start another order book, it will be another Node.js process. There, I can change these variables to be whatever I want. But here, the first thing I check is the user hitting the right order book? If they aren't, we return right there. If they are, is when we call the fill order function, which returns you the executed quantity, how much of your orders were filled, and the actual fills. Who did you get connected to? Not who, like the person that you got connected to, but at what price was a certain quantity of yours exchanged. That is what fills over here is. Again, we will discuss this tomorrow, it is fine. And this function, fill orders, is what actually fills your order under the hood. This is a long function. So, breathe before I go in here. This is a long function. The first thing that it checks is, what is the max fillable quantity? If this person comes and gives me a very big amount, I want to buy 200,000 shares of Tata, max fillable quantity might be just 20. We can only serve 20 of your servers requests right now. And if the type is immediate or cancel, if the user said, I want immediate this thing, or I want the order to be cancelled, and maximum filled quantity is less than quantity, the maximum amount of order that you can fill based on the current order book is less than what the user wants to be filled. User wanted to buy 2 lakh stocks. You can only give them 20 stocks right now because your order book isn't liquid, let's say. Then you return right there. You tell the user, rejected. Sorry, we cannot support your request right now because this is a market order. If someone sends IOC, most probably they went to a widget like this, clicked on the market order and sent some data. You don't want to partially fill them. You don't want to say, ye lo 20 right now and rest of your 9800 stocks I will eventually fill. No. You tell them, sorry, we cannot fill your order right now. If the user then decreases this quantity or this amount to, let's say, $100, then we might be able to fill their order. That is what this first set of lines do. And then comes the main meat of the logic. The logic that, if you are trying to buy, if I am trying to buy, then what will I try to compare against? If I come over here and try to buy, these are the people who are willing to sell, the asks. So I will go over here from bottom to top and try to fill the order, right? That is what happens over here. This should be sorted. There is another bug over here. Asks should be sorted before you try to fill them. You should start from the bottom. Can this quantity be filled by this guy? Let's say it can. Then you stop right there. If the person wants to buy 200,000 stocks, then of course, we will put 50 stocks. Then we will put 86 stocks, 240 stocks, so on and so forth. We will slowly start to fill the user's orders. That is what happens in this orderbook.asks.forEach. What do we check? We check if the order.price is less than equal to price. I repeat, if I want to buy at a limit of 135, I can buy up to 135. Uske upar main nahi kharidunga. I won't pay more than that. But I'm willing to pay 135 price per unit. Then all of these until this point, I can eat up. I can get matched to all of these. We will of course start from the bottom. And if we're able to fill the quantity, great. If not, we'll move on to the next one. If we can fill the quantity, great. If not, we'll move on to the next one, so on and so forth. So we check कि order ka price should be less than equal to the price that I'm willing to pay. If I am willing to pay 135, then order price is less than 135. We can proceed over here. Filling the ask, we get what is the amount that this order can fill. math.min, the quantity I want to buy, and the order.quantity. If this order has 18 and I want to buy 50, then this order will only be able to fill 18 of them. That is why const filled quantity equal to math.minimum. या तो मेरी quantity या फिर what exists on the book for this specific price. Whatever is the minimum, I will be able to fill that quantity in this specific order. We log it. We decrease order.quantity minus equal to filled quantity. कि यार तेरा 50 have been, let's say, filled. If the user wanted to buy 50 and this guy has 154, then it will be like 50 have been filled. You will go down to 104. Book with quantity. This variable right here. यहाँ पे भी तो something will change now. If at a certain price an order has been matched, this quantity would go down. That is what this line of code does. कि book dot with quantity dot asks order dot price equal to book dot quantity dot asks order dot price minus filled quantity. If at this price 2 orders have been filled, this amount needs to go down. The UI needs to now show, here you don't have 116 anymore, you have 113 orders now, let's say. We push this to the fills so that the front end can see this. If you remember Postman, if I send the right things over here, it returns me the fills. कि आपका order fill हुआ, these are the specific prices you got filled at. So we pushed the price over here, the quantity that is filled, and a trade ID. Here this is the trade ID that was generated, which is a globally generated incremental ID. This API is exactly the same as the Binance API. If I open the Binance API and go to /v3/order, spot trading endpoints, new trade, the response that it returns the fills. Okay, at this price, this much quantity was matched, this much commission Binance took out. This is the asset in which Binance took out some commission, let's say 4 USDT, and this is the trade ID, which is, as you can see, an incremental number, 56, 57, 58, 59, so on and so forth. So we're just trying to recreate a similar API for all the fills that have happened for the user. That is what this line of code does. Then we increase executed quantity, the thing that we send over to the front end. Executed quantity plus equal to filled quantity. The left quantity minus equal to filled quantity. The quantity variable that the user sent to the variable, we slowly decrease it. As fills keep on happening, we slowly decrease that number. If order.quantity becomes 0, if this specific order became empty, let's say, there was a single order over here and it became 0, we can remove it from the order book. We remove that specific order from the order book. And similarly, this did not work because this was a string. That is why. Similarly, if the ask at a certain price here becomes 0, if this thing becomes 0, it should be removed from the order book, right? Or if this person's quantity became 0, we can remove this from the order book, right? Do you see any orders over here that say 134.330? No. If a quantity ever becomes 0, you can remove it off the order book. That specific order is done. That is what happens in this line of code and this line of code. After you have iterated over all the order book, if there is still quantity left to be filled, is when you put it on the order book. I repeat, if someone sent you 50 USD or 50 quantities to fill, you were able to fill some of them, and rest of them you will have to put on the order book, right? That user will now sit on the book and be waiting for other people to fill those orders. If the order is partially filled, if someone wants to buy, at the limit of 135, I want to buy a lot of stocks. If I click on buy now, I will be able to buy all of these until this 135 point. I won't be able to buy this, and hence then I will sit on the order book. Here I am willing to buy at 135. Please, if someone wants to sell, please take it from me. If the quantity becomes 0, we push on to the bids. I am willing to buy. I will eat all of this until 135. I will eat all of this. And then I will sit over here on the green side. Okay, I'm willing to buy for 135. I ate all the orders until 135. Even this one right here. Now the best ask is 135.14. And I will myself sit over here on the ask side, bid side. Okay, now I'm bidding. Can someone please buy for 135? Because I'm willing to pay, let's say, 135 for these many quantities. If I literally place this order, what will happen? I will eat all the asks until 135, and I will place the rest of my bids over here. Jitne bhi bachi quantity hui. That is what this line of code does. And then we also update, the other variable that we had, that the front end sees, ki haan bhai, at 700,000, a new order was made. That is how the bids get processed, or the buy side gets processed. Whenever someone places a buy order, be it a market maker or be it retail, doesn't matter. Someone creates a market order, buy order, We go over the order book and try to match as much as possible. If we are not able to match, we push this user's order onto the order book. And similarly, in else, the logic is exactly the same. You go over the bids now. If someone wants to sell, you go over, care what, who all were willing to buy. You sell them, pick some of these, you sell the stock from that user to these bids. And then, if something is still left, then the user sits on the asks side. The user sits over here. And then you return to the user accepted the quantity and the fills that have happened. Let's do a quick poll. Let's see how are we doing. A very trimmed down version of an order book. Thankfully, it will remain this much only. A bunch of these events will get propagated over to the Redis queue. I repeat, a bunch of these events after the order book is done will get published to an events queue from where WebSocket server will pick up, even the API server will pick them up. But this is the the code on this order book will look very similar to what I've written over here. Let me do a quick poll to see how we're doing. We're at 9 p.m. anyways, so we'll take a pause. But tomorrow I will push all of this order book. Okay, we're doing good. Nice, surprising, sort of good. We're doing bad. Started at 90, reached 73%. So I'm going to open chat now. The class has started doing good. Nice. So we'll take a pause. But tomorrow I will push all of this order book. Okay, we're doing good. Nice, surprising, sort of good. We're doing bad. Started at 90, reached 73%. So I'm going to open chat now. The class has officially ended, but I'm happy to answer any questions. Please clear all the doubts around order books specifically, very basic process. This process right here, if you understand this, everything else is more system design. This is a lot of math, a lot of finance jargon. So any questions you have now, I'm going to open chat. Class is officially over. If you understand everything, feel free to drop off as well. With that, let me open chat. Bunch of questions. All right. Oh, wow. Okay, I'm going to stick to the questions related to the class first and we'll go from there. What if queue goes down? You are screwed, sir. If the queue goes down, you're screwed. So thankfully, if the queue does go down, all the existing orders that were coming, we were only telling the user your order has been placed. If this event reached the queue, got processed, reached back to the API server, then we were telling the user you are good. So if the queue is down, the user will keep on saying, sorry, order not placed, or sorry, order not placed. You do keep a backup of all the data in this queue somewhere else, so that if the queue itself goes down, you have all the data of the queue somewhere retained that you can recreate the queue from. Very similar to a database, right? What if a database goes down? You have a backup of the database somewhere. You can recreate a new database.
All right. So the code part of it is a little tricky. I want to have that particular code in my own laptop so that I can actually read through it and understand it. But the lecture has ended. It was a very long lecture. Oh my god, the understanding of it is so difficult. But I think the code bit is going to be a little more difficult tomorrow. Like, I was thinking that the architecture part of it would be difficult, but to be honest, I think everything is difficult in this. I think while making it would be a challenge. Uh, where is this particular? Yeah, yeah. So what I'm trying to do right now is, yes, there's 100x devs cohort 2, 100x devs cohort 2 in GitHub, and from here I have to go to APIs week 30 order book 1, week 30 order book 1, your repository, week 30. What is going on? Yeah, week 30 order book 1. Great. I swear to God, please don't work on this, man. I wish nobody worked on it. Let's just see it. Week 1, day 1. So, order book.ts. Alright. Wait. API slash server is not present. I think it would be week 1, day 1, source, order book, TS, status TS, index.ts, and then there should be a function fill order. Okay. Uh, okay. Okay. So what I'm gonna do is I'm just gonna take this and clone it for my learning. Terminal cd documents learning mkdir week 30 or week 30 order book cd week 30 order book get clone. So I'll just clone the repository and let's see now pwd. Yep, this is what cool Harkirat does. We're going to use cursor, not VSC. New open folder, search this. Okay, whatever cool Harkirat does, I'm not able to do it right now. Wait a second, there must be a way, right? Open, yeah, this, no, it's not happening. So, okay, can I not just open? Let's not be a documents. Then there is learning. Is V30 order book. V30 order book. Alright, so we are in here. Week 1, day 1, source, index.ts. Yep. Alright, this is to revise everything that we've been doing. So, app.post API v1 order is the main endpoint which we talked about the entire day. There were 4 main endpoints. First was the post endpoint, which is this one. This is what we need to maintain the entire order book. The second endpoint is the delete endpoint. The third endpoint was the post endpoint. The fourth and the last endpoint was the cohort endpoint. The cohort endpoint was, I forgot about the cohort endpoint, but I think, yeah, the cohort endpoint was related to how a particular market thing is always going to be very similar to a limit thing. Like, even though if a person is like, okay, I want to buy 10,000 worth of Solana, it doesn't necessarily mean that they won't have a fixed price. It will like add up a fixed price, and that is what the code endpoint search and code endpoint does. So yeah, that is what we were doing. Now the app.post endpoint is here. We're passing it through the Zord validation. These are the data that we got from the Zord validation and like the request body when the user is going to hit this. Let's go to output input schema. We have base code, code asset, base asset, code asset. So you remember, right? Base asset is going to be the left asset, which is the one that is getting traded. So like if I'm putting my USD and I'm buying Solana, Solana is going to be the base asset. The code asset is going to be obviously the thing that I'm buying. Price is how much I'm willing to pay, and quantity is like for how many number of the items I'm going like asset I'm going to buy for that particular price. Side type, side is buy side, sell side, type is limit or market, kind is IOC, which is uh, I think it was input or cancel, something like that. And what it does is basically gives you an option of like, let's go back to Harkirat's code, what the IOC does.
Find the code over here. So if you, I repeat, they say I am the very rich, put some extra fee to buy and the order dot quantity. If this order has who did you get connected to, not who like the person that you got connected to, but at what price kind field over here represents. If the user wants, they can send the IOC flag, or they can send the type of the order, immediate or kill, or immediate or cancel. This basically means whatever quantity the user wants executed, either the complete quantity executes, or you tell the user, sorry, we don't have enough liquid.
Yeah, so basically, if the entire quantity wants to get executed, or like a user wants to execute the entire quantity at once, then we use the IOC, immediate or cancel. Either immediately do that or cancel the order, right? So we did the Zord validation thing. This part is done, getting the data. Now, then we are going to get the order ID, which we does like randomly generating it. Great, good, all right. So after generating the randomly generated order ID, if base asset does not equals to base asset, because this particular order book is only for BTC and USD, so we are going to maintain that. Even if you see here, the request he must be sending is indefinitely in BTC and USD, because it won't be possible if he is not doing so. So postman, we saw postman for once, man. Oh my god. Yep. So BTC USD. All right. So after all this verification, the next thing that is okay, we want to fill the order, and this one was particular thing that I did not understand very well, but I'll try my best to make something out of it. All right. So function fill order. Basically, this function will have all the data that we got from the request body, the status. All right, all right, all right. Why is this here? Okay, this. Okay. I'm really bad of me. Basically, these are the arguments, and this is the type that this argument is going to take. So that's why order ID is having a string type, price is having a number type, quantity has a number type, and side is having like the two options it is present. It is like an enum. Type is IOC, and it is optional because, as we remember, it is a boolean, right? We can see it over here as well. It is optional, not boolean. It is optional. My bad. But yeah, we are here, right? And then this is what is expected from this fill order function. Like, what is the data that is it's going to provide us? The status, either it is rejected or accepted, because a order will be either accepted or rejected. Same goes for the executed quantity, and the other thing is the fills. All right. So this is what we are doing right now. Now, I don't know what fills is, but let's just go through it one by one. And if we fail to do something, we'll just look into Hakirat's video. Max filling quantity, get fill amount, function get it around. I think I'll have to look into it again. Max fill quantity. So, how much quantity can be filled? Basically, right? That's the logic. So, if I have 20 quantity and I have $20, so I have like $400 worth of money. The side is buy. If side equals to buy, order book asks for each order where price of the order is less than the price. Okay, because this is a buy side, I want to buy the asset that is less than the price that I'm paying. Makes sense, because I won't buy something that is out of my reach. So buy something that is less than the price that I'm paying. And then filled equals to filled plus mat dot minimum quantity. So this is basically the get fill amount is more like the get quantity amount. What is the minimum quantity, right? Okay, so let me make a note of it here. So get fill amount is more like telling you how much quantity is left after the trade that you did happen, is my understanding. All right. Okay. But filled is increasing, right? And initially filled is 0. So is it that, or is it like how much quantity am I going to buy? Okay, it might be is more like telling you how much quantity the user bought. The user bought on the amount and quantity he mentioned. Make sense? We are using price just to know, okay, whether I want to buy this or not. So, all right. All right. The second part of it is, okay, I got the max fill quantity. So, like, what is the number of data or like number of quantity that I'm going to, and it's an array? No, it's not an array, it's a number. So, what is the number of quantity that is going to be filled or used? Number of quantity max file quantity, number of quantity that is going to be filled with the request. All right, if type is equals to IOC and max fill quantity is less than quantity, ठीक है, because max fill quantity just shows okay, if the max fill quantity exceeds the quantity that well 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 how like how can max fill quantity ever be higher than quantity is my question. I can be wrong. Type equals to IOC, which is again immediately or cancel. If type see, if these both conditions are matched, okay, like I immediately want to put the order, or I want to cancel it, and my max fill quantity is less than the quantity. Oh, that is true. How can max fill quantity can ever be higher than quantity? All right, max fill quantity. I think let's go back to max fill quantity again. Side equals to by order would ask for each if order price is less than price quantity is added. All right. So if I have one house in 2 CR, I have 12 CR. There is 3 CR, 4 CR, 5 CR. 1, 2, 3, 4. I can buy 4 or 5. And in this particular scenario, if I wanted to have 6 houses and 5, and 6 is greater than 5, that means there is a partial balance maintained. If there is partial assets given, which further means there is, if there is max fill quantity, that means there is partial assets given, which further means there is restriction to IOC, and that's why the above. And yes, max fill quantity ever be higher than quantity. This is the max fill quantity 5. My house is 6. Either the quantity matches. If the quantity matches, then that's that. Okay, maybe I'm tripping. If there are two sets that have 50 and imagine 45 prices, so like I have 50 and there are 10 prices lower than me, so like 48, 49, 51. Oh, sorry, XYZ, and all the prices are 1 point, 0 0.2, 0 0.1, and I want one quantity. So I'll take it out, take it out, take it out, take it out, take it out until I get. Why are we not subtracting the quantity? dot quantity. I think this is a valid question, but anyway, we're going further. So if site equals to buy, if I want to buy, then yeah, if I want to buy, order book dot ask for each order placed in an order book where price is less than price, because if I want to buy, then I want to buy something that is cheaper than the price that I'm putting out, right? So it should be less than that, and the quantity should be greater than 0. Like the quantity that I'm asking, right? Cost fill quantity is equals to mat dot minimum quantity comma o dot quantity. Order quantity minus filled quantity. Wow. What if the order quantity gets 0? Then what will you do? Hmm? Imagine if I want to have 10 stocks worth and I'm willing to pay $20, and there are people bidding at $19 and the quantity is like 3. So what sense does it make for the order? Okay, so I have to reflect the order quantity as well in the order book, right? So that's why order quantity is getting subtracted. Okay. Book with quantity dot ask o dot price. So this is book with quantity that is getting updated. Why is it or 0? Why is it all 0 here? Then fills dot push. What is fills? Fills dot push price, which is the price, quantity, which is the filled quantity, traded trade ID. Okay. Is it the order book getting filled? Executed quantity is equals to executed quantity plus filled quantity. Quantity is equal executed quantity is equals to executed quantity plus filled quantity. But we haven't. Where is executed quantity though? Executed quantity is 0. Okay. So executed quantity is equals to executed quantity plus filled quantity. Executed quantity is important because we want to know, like, okay, how much get did it get exhausted? But according to what I was thinking, filled quantity is how much got filled. Filled quantity is a mass or minimum. think it does make sense, even though it's a little, because filled quantity. What is filled quantity? Order books working. I have to think of it. Okay, filled quantity. So this value is filled. This is filled. Think of it as you can do it. Const filled quantity is equals to mat thought minimum quantity, and so basically filled quantity is how much quantity is getting filled. Either it's going to be, okay, if I want 2 houses and there are 5 houses present, then the filled quantity will be obviously 2 houses. But if I want 5 houses and there are only 2 houses present, there are 2 houses present by this particular man, and then there are 5 houses or like 3 houses present by another man. So I'll take first his houses and then his houses, right? Yeah, it makes sense. So filled quantity is the quantity that is used in that order in that particular order slash trade. And maxed is the quantity that is used in all the order slash trade out of quantity is equals to quantity minus filled quantity. Yes, this is valid because we don't want the exact quantity. If order quantity equals to 0, order would ask index of O, comma 1, 1. If order quantity is 0, so I bought everything that I wanted to buy. Ask dot splice order book dot ask index of O. If book quantity dot ask price equals to 0, I want place on the book if order not filled, because either order is matched. If quantity does not equals to 0, there is still some left. Then order to price quantity is equals to quantity minus executed quantity. Alright. I have a basic understanding of it. These are my questions. Let's ask GPT about it. Can you explain the above to me and make me understand all this? I think it's about to be 4 hours. Yeah, Master Chef India, let's go. It's 3 hours. If it is a dry run preview, it scans the order book and answers the question. If I were to place this order right now, how much quantity could potentially get filled? It does not actually fill anything, no quantities change. It is just counting. It is just counting. I understood that part. So it scans the order book and answers, if I were to place this order, how much quantity could potentially get filled? Okay, okay. Field equals to 0 if side equals to buy order book dot ask dot for each order. If order dot price is less than price, field equals to minimum quantity. So like how much quantity will be needed to potentially get filled? So it can be less if the order quantities are more. It can be equal if order quantity equal to quantity demanded by user, and also be higher. So you want to buy 5 Bitcoin. The book has 3 asks, each with 10 Bitcoins. So my understanding of it is correct, right? What can I say? Crazy. Bug in get filled amount. Why we are not subtracted quantity? So get fill amount. Yes, variable never decrement. It looks bug in this course. I have 5 BTC and there are 3 asks each with 10 BTC available. So ask 1 filled after 5 even though you only wanted 5 BTC. Wait, so fill is a record of one individual trade match that happened while processing your order. A single order can match against multiple existing orders on the book. Alright. 30, 40, 30. Last question. No good now. It is buggy. Okay, so I have a basic understanding of it right now. We are going to do it tomorrow again. So it will be revised, everything will be completed again. I think it's been a while since I started a stream. So like 3, 4, 5. Yeah, about 3.5 hours. Maybe I'll just continue it a little later now. For now, I think it's fine. About 3. Okay, yeah, it's been 4 hours. It's all right. It's all right. Uh, let's do this again tomorrow properly. I'll try to revise it once more, and then we can go about it. Let's see what I'll do in the evening. I don't know what I'm going to do, but if I'll study, I'll put up a live stream again, and that's it from my side. See you all later, skaters.